is the best of both worlds, which is this spirit of innovation, the spirit of can-do, etc., but the responsibility of partnership. We don't know better than you. We're actually going to work with you, of actually having dialogue and respect for our city partners, for regulators, and then continuing to take risks and continuing to do daring things. And I think we can accomplish that.
Imagine this audience here is a collection of mayors or a collection of city officials, and you want to depict, this is the Year Ahead conference, depict what the years ahead in this thing are going to be like. How far is driverless cars going to go? You talked just a few days ago about the idea of there being flying cars in 10 years' time. Can you just give a description of what you think transport is going to look like?
Well, I think that we think there are three keys to transport and where the industry is going: autonomous, electric, and shared. And I think all three are necessary in order to get to the next level of city planning, et cetera. There are many cities where up to a fifth of the space taken in these cities is taken by parking and storing these cars. And so I do think that you need autonomous, you need electric, and you need shared. And I do think it's going to take some time. True autonomy for every single use case is some ways away. What we bring to bear is our developing autonomy, and we will have autonomous cars on the road, I believe, within the next 18 months, not as a kind of a test case, but as a real case out there. And over a period of time, we're going to bring autonomous transportation and feather it in with the non-autonomous transportation with drivers.
What does feathering in mean?
Feathering in
mean to a
means
layman like
feathering
me?
Crashing. Yeah, feathering in means if you're, for example, in Phoenix, and you make a request to go from A to B, which is what you do with Uber, there will be 95% of cases where we may not have everything mapped perfectly, or the weather, the right weather, or there may be an accident on the road, or you may not have 2 or 3 ways of getting from A to B, where you may say, you know what, that's not an autonomous use case. We're going to send a driver to pick that person up. For 5% of cases, everything is going to fall into place. And we will send an autonomous car. The user will be able to pick, do you want, there's an autonomous car, yes or no? And we'll be able to service that A for B. That 5% is going to go to 10 and 15 and 20 as our computers and our algorithms learn more and more about what it takes to drive in a city in a real life situation. And every minute of every day, that driver, that computer is going to get better and know Phoenix better and better and better. And in 5 years, we'll have the perfect driver in Phoenix. We will have to retrain that driver in every single city. We're going to have to build out 3D maps of these cities. And it will take time, but over a period of time, you essentially have a driver who becomes the perfect driver. It'll take 10 to 15 years, but that's the feathering in that I'm talking about.
And will a child born today, will they ever need to learn how to drive?
A child born today? No, I don't think so.
So within sort of 20 years from now, we will...
I don't think so. Listen, I hear some groans.
And also,
I heard a couple of groans. 1.3 million people die from car crashes every year. 1.3 million people die from car crashes every year. That doesn't count an estimated 20 to 50 million people that are injured. Okay, this is actually a public safety issue. If you look at cars, 96% of cars, 96% of time, cars are sitting there not being used. It is a huge amount of pollution that's caused by these cars being in the road, and a huge amount of wasted time. So the safety is there. Electrification is absolutely key, and sharing these platforms is going to allow us to be much safer and also put our assets where they add value.
But it's quite interesting because when you first came in, I remember you sounding somewhat more skeptical about self-driving cars. You've been converted. Is that a?
The choir has spoken, and I'm listening. It's pretty exciting technology out there. But again, it will be a hybrid technology for some period of time.
What about flying cars? That came as a slight surprise.
Yes, that's a great project that we're working on. It's called Uber Elevate. And it is actually about battery technology.
It would have helped a lot of people here.
I know. I wish that I was available. We'll launch it here if we can. But battery technology is allowing us to have multiple rotors on planes, or helicopters, if you want to call them that. These rotors that are much smaller will be much quieter than helicopters are. Much quieter, much safer. If you add sharing into the equation, you can actually get the economics of going from A to B. We think within 5 to 7 years to a place where normal people would think about taking these flying cars. That'll be the beginning, and then it's about scaling. And we're working with a number of partners right now.
Do you think the regulation on flying cars, I've heard some proponents of it argue that it might be easier than it has been on driverless cars, because driverless cars, you have to deal with existing roads, existing everything. Flying cars, essentially you're going into unconquered space.
I think that mayors that are forward-thinking understand that traffic and pollution are a real issue, and I think flying cars can be a significant solution to traffic issues in cities. And these cars, to start with, they're going to be very specific. They'll be kind of highways in the air. There'll be very specific routes that these flying cars go on. They're not going to be able to take you to your backyard and land in your backyard. There'll be these skyports. So there'll be very specific routes that you go on. And I think if you build a regulatory framework that has that kind of structure around it, I think you get to a better solve.
Can I drag you back, somewhat reluctantly, back to the real world? But you have Rajiv Misra, who came in with you from SoftBank.
Yes.
He's going to become a director. Last week, he said that Uber should focus on repairing its market share in the US and on key European markets, rather than going to new ones. Do you agree with that? Is that the way you look at Uber?
I think one of the fundamental strengths of Uber is the global scope that we have. This is
you
a brand.
had that motto, everywhere. What's it? Everywhere for everyone.
Yeah, everywhere for everyone.
Do you want to make it some places for some people?
No, we like the everywhere for everyone. It's much sexier than some places for some people. That's
telling me.
Just not interesting. I do think seriously, though, the global scope that our company brings is important. Our being able to build technology that we can amortize essentially everywhere in the world is hard, but it is part of the fundamental value that we introduce. So I would look at Uber very much as a global brand. That said, we're going to look at all opportunities, but at this point, we are leaning forward. In 2018, for us, is going to be very much a lean forward year for the company.
But without, I'm not trying to create new boardroom tension at Uber, but that would appear that SoftBank is keener on a more limited idea, whilst you're keener on everywhere for everyone.
Well, listen, SoftBank is a very important shareholder. They're our largest shareholder, and many of our shareholders have opinions over what's the right thing to do. Ultimately, the governance of the company is going to be at the board, and we'll have those discussions at the board, and we'll set our long-term strategy, and then execute on it.
One of the things which Uber played, perhaps not very fortunately, a role in was the whole sexual harassment questions and everything to do with that. I suppose one very obvious question: do you think that you have solved that part of the culture? But secondly, do you think that is this is a real revolution and it's going to stick?
I think that what was happening at Uber was serious, and I think that while what Uber went through was difficult, I think the Susan Fowler blog was probably one of the best things that happened for Uber, and it certainly started a movement that's an incredibly important movement of the company. I'd be reticent to say that it's solved.
Yeah.
But it's not an endemic issue within the culture of the company, and I think the company has learned, and I think the company took very harsh and appropriate steps to make sure that kind of behavior is absolutely clear, that kind of behavior is not accepted in any way, shape, or form of the company, regardless of where you are, regardless of if you're a great performer or not. So I think we're at the right place for Uber as a company. But I think in general, we're not where we need to be in terms of women in senior positions, making sure that we're welcoming of women in technology, and we help women really build their careers within our company. There's a great kind of bottoms-up energy there, but we're not where we need to be, and we have a lot of work ahead of us.
On the issue of, you talked about the top performers, is that looking back, and also I suppose looking forward for many of the people in this room, because there are a lot of people's businesses which have been affected by this. If you had to give lessons to other people who are now looking at this issue perhaps more seriously than they have done before, is the really bad issue, and I suppose I'm thinking in some ways about the media industry in this, is that giving top performers more room for maneuver or whatever than people, or more discretion than people thought? Is that top performers need to be treated the same as everybody else?
I think they absolutely need to be held accountable. One of the really valuable lessons that I got early in my life was actually through Jack Welch, and he said, it's very tempting to allow top performers to misbehave in any way, but for me, he was talking about being aligned with the CEO. Sometimes you allow top performers, the tendency is, well, let them get away with some kind of behavior that is not the right behavior because they're so good. And what Jack told me very early on is that it's the top performers who are problematic culturally that are the most dangerous because they have followership within the company because people look up to them. So he's like the dumb person who is bad culturally. He's not the problem because everyone says, well, that's a dumb person, so who cares? It's the smart person who has followership. So it is incredibly important for the top performers to actually be held to account more radically than anyone else because they're the ones who have followership at the company and they have to set the example. So for me personally, that has absolutely guided how I've managed. Expedia was a company that had, excellent cultural values. And one of the first things we did at Uber was to go out and reset our cultural values, and we call them norms because to me, it's not just these values that you put on the wall and kind of people stare at and it's all nice. It's about behavior. And we set out to change behavior at Uber, and I think that the company was thirsting for it, and we are starting on a path, and I believe it's going to be a positive path.
An inevitable question, I hope you won't regard it as a cheap shot, but you talked about smart people who have followers throughout a company. I mean, Travis would seem to be the epitome of that sort of figure. Is that, do you think of him as being in that category of people that Jack Welch was talking about?
I think, listen, Travis was the CEO of the company, and he had incredible followership, and he was held to account, right? I mean, he's no longer the CEO of the company. And he's a board member. He's a big investor, and so he's absolutely going to play a part on the board. But we've also been very clear as a company that we do have to make a break with the past, with how we behaved as a company, and to some extent with the new CEO being a very different kind of a CEO. So in the end, you have to be held accountable, and I think that Travis was held accountable, and at this point, he's a board member and a constructive one at that.
If you look around
everywhere, then we become a real car ownership, and that really opens up the market for us, but it also opens us up to many more competitors.
And is Google at the forefront of those competitors at the moment?
Google is one of many. I think that they've developed technology, but what we think, which is exceptional, is having autonomous technology and the network under one roof, which allows us to use autonomous in a very practical way, nearer than you think.
There's an inherent attraction to light and being human. And I think on a very deep psychological level, light is this way in which we experience the energy surrounding us in a very personal manner. My name is Matt Dilling. I'm the founder of Light Bright Neon Studio, and we manufacture, produce, and restore neon works of art and design. Origins of the creative content of a lot of the work at Light Bright comes from a variety of sources. Sometimes people come with a napkin sketch, some people come with an Adobe Illustrator file, and we have a whole design team who then we kind of work together to help create layouts of what it might look like. Scale it up and create a paper template using a pen plotter. And that paper template actually becomes our guide for what we're going to bend the neon to. We take from the office into the glass shop. We pick out the right size tubing with the right color for the right size project. From there, we heat up the glass tubing. The torches heat the glass well in excess of 1,000 degrees in order for it to get into its molten state. We heat up and bend the glass tubing to match the template. One of our chandeliers has over 100 different bends in it. So each one of those bends has to be marked for a heated up bend. We also have to allow the glass to cool between the bends so that the next area can be worked on and heated up in its own unique fashion. It turns into spaghetti, and then we have to make sure that that spaghetti lines back up and cools to the template. We use a blow hose to connect our mouth to the tube, create a volume that's closed, and we can control the pressure in there with our mouth. There's just a variety of challenges that come up inherently in working with glass. Glass can crack due to stress, and sometimes you'll just have a batch that all it wants to do when it gets near a torch is crack. After we've bent various components, we have to go in using the crossfire or the hand torch and actually weld all of those pieces together. The last step on that is then to weld on electrodes onto either end. Each one of those steps is very, very specific. I draw inspiration from so many different experiences. It's hard to come up with one thing that's particular, but one of the ways that I really am able to connect with the creative is to float. Floating is a similar experience to meditation, to psychedelics. Going into a blackened room and laying out in a body of water and salt that's heated to your body temperature, and it allows for all sort of external stimulation to fall away. And your internal world really begins to bubble up and manifest. You really get to experience a different relationship to your mind. I think I work with neon because I can't not work with it. It's so challenging and so rewarding. And those things are so intertwined that there's no way of separating it out. I've learned so much and continue to learn so much by working with it. I find so much inspiration in working with it, and I just continue to experience new and different things through the medium. It's that close to me at this point. Once the neon tube is completed, we have to hook it up to our manifold for bombarding. The manifold is opened, a vacuum is drawn. We check the tube for leaks with our Tesla coil. We close the tube back off, and we heat it up using a very large and powerful transformer. As the tube is heated up, it releases anything that's not inert inside the tube, and we evacuate that out. We introduce the gas into it. and we seal the tube off, sealing into that tube whatever gas we introduced into it. I think my favorite part of making a neon light is when I see it lit up for the first time. Different gases, when electrified, emit different wavelengths of light. Neon gas is this very bright orange, fiery red color. Argon gas creates a very intense blue, but that light output that is produced can a different wavelength by coating the inside of the tubes with a phosphor coating that takes that one wavelength of light and emits a different wavelength. We bring it over to the aging table where we hook it up to an age-in transformer and allow it to settle, age the gas in that we've introduced to it. There's always a stray particle of something left inside the tube. But that time that the oxide coating can act to scrub whatever is left inside the tube while things are getting settled into place. Once the tubes are aged in, we move on to our process of assembling two halves of the fixture together in a jig, gluing up the center of the fixture to its spindle. Once the adhesive dried, we would connect the wires from the fixture together into a transformer, and we turn on power and it lights up. Part of what we love about what we do here is that we try and put out into the world the kind of things that we'd like to see. I still am surprised when it lights up. I'm still excited when I get to see it illuminated. There's an ineffable quality to it. To me, it is this insight into the inner workings of the universe. It literally is. It's a way of looking at what is surrounding us in the cosmos in a new light.
This is Bloomberg Daybreak Middle East. Our top stories this morning. 10-year Treasury yields rise again as investors await the Fed's latest policy statement and President Biden's address to Congress. Meanwhile, inflation expectations hit an 8-year high amid the recent rally in commodities. Oil gains as well overnight as OPEC Plus projects a strong recovery. Saudi Arabia's Crown Prince says the kingdom is in talks to sell off another 1% stake in Aramco to a leading global energy company. JP Morgan is the first major U.S. bank to mandate a return to offices for its entire American workforce. Jamie Dimon wants staff to come back as soon as July. Just gone 8 a.m. across the Emirates. I'm Yusuf Gameneddin in Dubai. Let's take a look then at the state of play in global markets. Overnight, quite a bit of momentum coming through in select asset classes. But in U.S. stocks, it was really technology that saw a retreat with the mega cap earnings in focus. Microsoft falling as much as 3.5% after reporting third quarter results. Currently, we're indicated about 0.1% higher on the S&P 500 mini. U.S. 10-year yields at 162.16. We talked a little bit about the break-even inflation rate reaching an 8-year high. We had a 7-year Treasury note auction that saw a bit of a demand comeback. Technically, we've been holding the 50-day moving average here since Thursday. Aussie dollar at 0.7741. We're down 0.3%. Weaker than expected inflation data, reinforcing the view that monetary policy normalization is going to lag behind the Fed. So the greenback advancing broadly in the G10 FX space. And then Brent crude just looking for a little bit of direction. Goldman Sachs is saying that commodities are going to soar 13.5% on record oil demand. And UBS says look out for $75 as the next line in the sand. Let's get you some more color from the markets in Asia with Juliet Saleh from our Singapore studio. Jules.
Hey, Yusuf, it's been a little bit of a cautious start to the day's trade here in Asia, although we are seeing a little bit more momentum to the buying side as the afternoon wears on. Jeff Halley over to Rwanda saying you're seeing the pre-FOMC shuffle occur. Now, despite that weaker inflation read in Australia you touched on, Aussie stocks looking quite good. Ansell, the glove maker, doing incredibly well after upping its full-year guidance. It says it's continuing to see strong demand coming through for PPE. Also getting those numbers coming through from Hong Kong Exchange. Hong Kong is on the lunch break at the moment. The Nikkei 225 is up by about 1/3%. We saw Japan retail sales rise faster than expected for a second straight month in March. The Kospi underperforming, though, as SK Hynix weighs after its results. And seeing some more gains coming through in Indian stocks as well. MLive's Wes Goodman saying that Indian stocks are facing a new threat that could be a bigger problem than the virus, the end to central bank easing. And, of course, Yusuf focusing on Hong Kong Exchange, which was expected to come through with some pretty strong numbers.
Yeah, so 5.96 billion Hong Kong dollars. Yesterday was for 5.93 billion. So that is on the revenue and other income side. It is a beat. The net income line at 3.84 billion Hong Kong dollars. We'll keep a close eye on this particular company. Let's also run you through some of the first word headlines from around the world with Simone Foxman in Doha. Simone.
Good morning, Yusuf. President Biden says the United States has made stunning progress in the fight against COVID-19. Speaking at the White House, he said 215 million vaccine doses have been administered so far, and he urged anyone who has not been vaccinated to do so, pointing to new guidance that allows inoculated people to socialize outdoors without masks.
The bottom line is clear. If you're vaccinated, you can do more things more safely, both outdoors as well as indoors. So for those who haven't gotten their vaccination yet, especially if you're younger or think you don't need it, this is another great reason to go get vaccinated. Now.
China is reportedly set to show its first population decline since the famine that came with the Great Leap Forward in the late 1950s. The Financial Times says the latest Chinese census is expected to put the total at less than 1.4 billion people. The survey was completed in December, but wasn't released as planned earlier in April. A population fall could slow economic growth and force a rethink of government planning. Justin Trudeau has told the Bloomberg that Canada will meet its new target to reduce emissions by up to 45% of 25 levels by 2030. That's despite his country's record of missing its previous climate goals. Recent data showed Canada was the only country in the group of 7 to see its harmful emissions actually rise between 2015 and 2019.
It's not just about the oil sands themselves. It's also about consumption. It's making sure that Canadians are consuming less fossil fuels. We're going hard towards zero-emission vehicles. We're investing in retrofits. We're making sure that people have better public transit. Those kinds of investments reduce our fuel consumption, but so too must the world.
And JP Morgan is the first major U.S. bank to mandate a return to offices for its entire American workforce as soon as July. In a memo, staff were told they'll need to return on a rotational basis. Rotations will be subject to a 50% occupancy cap until U.S. authorities revise existing guidelines. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Simone Foxman. This is Bloomberg. Yusuf.
Thank you very much, Simone. Let's get back to our top story. Yields are on the rise again as markets await the two biggest events in a jam-packed week. You've got the Fed rate decision, and then you've got Biden's first address to Congress. That as inflation expectations have hit an 8-year high amid a recent rally in commodities. Copper is trading around decade highs, while oil is, on the move after the OPEC Plus group projected a strong recovery beyond the near-term setbacks to demand from India's virus crisis. Despite what he's calling clear signs of rising prices, Double Line's Jeffrey Gundlach says the Fed is still just guessing when it comes to inflation.
We don't know. Nobody knows. Most concerned about the fact that the Fed thinks they know. There's plenty of indicators that suggest that inflation is going to go higher and not just on a transitory basis for a couple of months. So we'll see. That's how I think the Fed is trying to paint the picture, but they're guessing.
Let's bring in Saeed Abukar. She's the Senior Executive Officer at ARC Capital Management. Saeed, going into this, the expectations are light in terms of what we might get out of the FOMC, but then I try and reconcile that with 10-year break-even inflation levels. They're at the highest levels in about 80 years. What do you think we're going to get?
Good morning, Yusuf. I think every time we head into the FOMC, we are expecting some kind of new update from the Fed. Overall, we've been actually range trading since the beginning of the year to the upwards. I'm expecting that we've done the correction now in 10-year treasuries back to 1.5 area. I think we're probably now ready to actually move back up to 1.9, 1.8 area, once again consolidating the recent losses in fixed income. My overall picture is that fixed income 10-year yields, 2-year yields are effectively tied right now into growth prospects. Obviously, with the recent initiative by the Biden administration to introduce a new fiscal package, that is obviously going to weigh on inflation expectations. So as long as that remains on track, I'm expecting that yields should tread much higher over the next few months. We'll see inflation expectations drop in the interim. We're still dealing with baseline shocks from the initial QE operations from the Fed. So overall, I'm rather bearish on fixed income in Q3.
I mean, in terms of where consumer confidence is, that's been rising as well. GTB Go for our clients. This is the Conference Board Consumer Confidence that suggests an economic boom is coming. You're seeing this quick rebound and supports the notion that there is a little bit of mileage, or still a lot of mileage left in the reflation trade. Do you agree?
I think there's a lot of mileage still left in the U.S. consumer. Remember, this is a period of time during COVID when the U.S. consumer was actually able to replenish savings for the first time in quite a while. So I think that you're basically, as we approach summer, as we approach increase in COVID vaccinations in the U.S., I think that there will be more consumption. I think you'll see the economy further opening up, and as a result, further growth. Now, this growth is obviously going to cause inflation pressure, and especially in terms of imports. So to the extent that I think that we're opening up still for the next 6-7 months until we normalize. This inflation expectations and consumer confidence is going to be very closely tied to the COVID relaxation in the U.S.
Saeed, then you have the defensive positioning that Bank of America talks about, which tells a bit of a different story. So they looked at U.S. investor positioning, and what they're seeing is that clients sold U.S. stocks for a second week in the period through April 23, withdrawing as much as $2 billion to lock in some profits at this point, given the rise and the rally that we've seen.
I think it's, I mean, what you see now is rotation. Obviously, tech had a tremendous rally over the past 12 months. You're actually seeing reallocation back to cyclicals, financials. Obviously, as rates rise, you're going to see further gains in financials and financial traditional stocks. Our overall picture is that growth is still expanding, and you should actually stay vested in the financial and pro-cyclical assets.
Saeed, hold that thought. We still have a lot to get through. That's Saeed Abukar. She stays with the program. This is Bloomberg.
By the Asian Americans. It was created as a tool to alienate the Black and the Asian American communities, and it was incredibly successful.
We know that racism didn't begin yesterday. We know it's probably not going to end tomorrow, but it is our job to make sure that there's progress and we keep people safe and give people dignity.
I spent a lot of time last year to just listen, to understand, to reflect, and understand what I could do as a leader of this organization.
For many years, we've been very shareholder focused, and now there really is much more of a community requirement.
The economic downturn in the U.S., we're seeing unemployment and income losses, women more than men.
2/3 of the jobs lost in South Africa were women's jobs. So I think we're in a moment of crisis.
Clearly, our societies are reproducing, not producing inequality.
We need better public policy, and we need companies to step up.
A Bloomberg scoop now. We're told Huarong repaid a $452 million offshore bond maturing yesterday with funds provided by the nation's largest state-owned bank. Sources say that ICBC gave the embattled firm a loan after regulators asked banks to extend aid, signaling that lenders are heeding government calls. Meanwhile, the Financial Times is reporting that China is poised to post its first population decline since the People's Republic was founded in 1949. Saeed Abukar, the Senior Executive Officer at ARC Capital Management. He's still with the program. Saeed, I mean, despite what looks like a move to try and salvage then some of these outstanding obligations, the cracks in policy making are...
To establish a debt market to fund future obligations.
So would you say that there is a good chance that we're going to get something comprehensive in terms of reform to address what looks like a gap in the credibility? I mean, there are a lot of questions that are now being asked, and any future assessment of risks, particularly when the rating agencies are gonna be analyzing this very carefully.
But when you look at China's 30 years, they haven't been actually playing homage to the short-term picture. They're actually looking at a bit more of a long-term picture. They're more of the 20-year plan, 30-year plan. So I think overall, we'll see Chinese authorities slowly address this issue, whether through either financial incentives or otherwise. I think what we're seeing right now is Chinese authorities trying to slowly rebalance expectations over the future prospects for Chinese yuan. I'm still expecting it to be rather range bound for the interim, for the Q3, between 6.45, 6.4, and 6.7. The actual fact that China was way ahead in terms of the U.S. in terms of their actions post-COVID actually tells us that basically you saw the equity inflow into China, and now as markets reassess China, we could see a short-term outflow out of China. So I wouldn't expect to see anything in terms of depreciation active depreciation from China, but I do expect to see some reduction in portfolio inflows into China, especially as we see a reopening of the European economy over the next 2 quarters. We could see a portfolio shift back from Europe, from China back into Europe again. So we could, my view remains 6.4, 6.7 China over the course of the year.
Yeah,
it's more stable for people to see.
Saeed, commodities are just taking a breather. They're not broken, is what the Markets Live team is writing. Out of the metals, which ones likely to outperform, and are you reshuffling?
I think as we do see reopening of economies, this is going to be still supportive of overall commodity prices. That isn't to say that we see dollar weakening. The dollar paradigm has multiple facets to it, including do we actually see the U.S. has a inbuilt premium in terms of performance over them? I think that the U.S. still outperforms the overall economy, given that level of stimulus that actually injected into the economy. To what extent that feeds into inflation expectations and to the widening of the current account deficit is yet to be seen. But overall, I think we're still relatively stuck in a range market with an upside trajectory in commodities by a dip size.
Sure. Saeed, it's been great catching up. Thank you for that. That's Saeed Abukar. She's the Senior Executive Officer at ARC Capital Management. More to come on the program. This is Bloomberg.
Right now, the mask fashion is not really favorable to makeup, but we know that, and we are convinced that when the pandemic is over, when people get back to a normal social life, when they meet each other, they party, makeup will bounce back.
President Joe Biden, nearing 100 days in office, addresses a joint session of Congress. COVID, the economy, the plan forward. Wednesday, 8:30 p.m. on a special edition of Balance of Power on Bloomberg Television and Radio.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
We had 2 big earnings reports from the mega caps, Alphabet and Microsoft. West Coast reporter Ed Ludlow has a story from San Francisco.
Google parent Alphabet gave us a glimpse into what online spending might look like in the post-pandemic world. Google Search generated sales of $31.9 billion in the quarter. Simply put, businesses are upping their ad and digital marketing spending in line with the economic recovery we're seeing, not just here in North America, but in places like Europe as well, as the vaccine rollout picks up pace. On the other side of the pandemic equation, YouTube saw its sales surge by 49% in the quarter to $6 billion as many of us continue to work and learn at home and continue to stream video. There was a similar effect that Google saw in its cloud unit, where sales climbed to $4 billion in the quarter, in line with Wall Street expectations. And investors were positive about a $50 billion Class C share buyback that was authorized by Alphabet's board. Microsoft also had a good quarter, sales rising by 19%, boosted by demand for Microsoft's cloud services and its cloud unit. It was the 15th consecutive quarter of double-digit growth, but shares fell in after hours. Simply put, expectations were extremely high going into this quarter, particularly in light of strong PC sales earlier in the year. And if there was one particular area of concern for Microsoft, it was around its games console unit. The Xbox struggled to sell in the quarter, largely because of...
I don't want to give any promises about deals finalizing, but there are discussions happening right now about a 1% acquisition by one of the leading energy companies in the world. This deal could be very important in strengthening Aramco's sales in a country where this company resides.
Simone Foxman has more details from his rare interview. She joins us now from Doha. I mean, Simone, this was a long night for the kingdom and for audiences around the world, a long interview as well. But how would this stake sale play into the Crown Prince's larger economic diversification plans?
A long night for our colleagues covering the story as well. But that 1% stake sale could amount to about $19 billion. And the thinking is that this money would go into the economic diversification plan that Mohammed bin Salman has so embraced, as did the $30 billion that Aramco raised when it IPO'd a small share in 2019. And the real important point is how do you turn this into employment for Saudi citizens? Mohammed bin Salman said he wanted to get to less than 11% unemployment for the local population by the end of 2021, sees that at 7% in 2030. Recall that in the fourth quarter we were at 12.6%. That's key to keeping his constituency happy, and that is the point of a lot of the economic diversification plans that he's really been pushing.
And how about regional politics? He also weighed in on some of the key themes, especially around Iran.
Yeah, and there are two big questions here. One is Iran, and the other is how does the Biden administration treat Saudi Arabia? It said that it wants to recalibrate the relationship. Mohammed bin Salman saying it is going to agree with the United States 90% of the time, the Biden team 90% of the time. Of course, that's going to differ between administrations, but trying to sound a conciliatory tone there. Of course, Iran playing into that as well, because the Biden team has said it wants to return to that 2015 nuclear deal. Mohammed bin Salman making some positive noises here, saying we're working today with our partners in the region to find solutions to these issues, speaking to issues like Iran's nuclear program, its support for regional militias. We've seen some reports recently that Saudi officials and Iranian officials met in Iraq to discuss their differences, this seeming to fall in line with some of that reporting.
And then elsewhere, in terms of economic diversification, Egypt is looking at a new plan as well. What exactly has come of it?
Yeah, the stress here is private enterprise, particularly green business, small and medium-sized enterprise, and also the digitization of Egypt's economy. That pushed in a new plan that was announced yesterday, intending, looking at growth, really. And growth is also on the table because we're expected to get a decision from the central bank today. It's likely not to be super exciting. 8 out of 10 economists believe that the bank will hold its interest rate steady at 8.25%. But there is room to cut, and that is what we would see if we saw any surprise. The pound has been relatively steady against the dollar. Inflation's been under control, sticking right there at 4.5%. So interesting that we see this economic diversification talk at the same time as we are looking at the pound and monetary policy.
Absolutely. Thank you for that. That's Simone Foxman at the Qatar Financial Center in Doha. I've got earnings on my mind, and so does the markets. Here are some of the big ones that are coming in the next few hours. We started with big tech overnight. We resume with big tech later on in the day. Apple is going to be coming up with their numbers, Facebook, and then on the aviation side, it's going to be Boeing. And we'll also hear from the autos with Ford. In terms of the global markets at this moment, I mean, we're looking for direction here. You can sense that the market's counting down to the Fed decision, and at the same time, just perhaps preferring to wait before taking any major conviction views. So we're just marginally higher on the stock futures in the U.S. 10-year yields pretty much flat here, less than a basis point higher. Your coverage continues. This is Bloomberg.
This is basically going to kick off the whole week.
From bank earnings really have to be front and center, to tech earnings.
The COVID boost is gone.
Bloomberg breaks the numbers as they drop.
Breaking news, Bank of America seemingly reporting earnings, and those trading beats are significant.
And furthers the conversation.
Big portion of the economy is up and operating very well.
There definitely is more to go.
No one delivers the data faster.
We need to talk about earnings in America. There's a pretty clear trend emerging.
Bloomberg Television, your home for earnings season.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
This is Bloomberg Daybreak Middle East. Our top stories this morning. 10-year Treasury yields rise again as investors await the Fed's latest policy statement and President Biden's address to Congress. Meanwhile, inflation expectations hit an 8-year high amid the recent rally in commodities. Oil gains as OPEC Plus projects a strong recovery. Saudi Arabia's Crown Prince says the kingdom is in talks to sell off another 1% stake in Aramco to a leading global energy company. And JP Morgan is the first major U.S. bank to mandate a return to offices for its entire American workforce. Jamie Dimon wants staff back as soon as July. We have some breaking lines hitting the Bloomberg then, this time from Toyota. A bit of an update then. They're disclosing their March sales figures. So the numbers are as follows. Output climbing 32% despite global auto chip shortage. The March sales is at a record, so that is up 44% on strong global demand. Basically showing Toyota's ability to keep churning out vehicles, despite this issue that we've talked about many times on this program and beyond, this global shortage of chips that's put the company basically now in a prime position to capitalize on the green shoots of demand. So your March sales figures comes in at 982,912 units, which is a record for a single month. That is what the company said in a statement. They produced 843,000, just a little bit more than that that month. That's up from 32% a year earlier. So some strong numbers there from Toyota. We'll keep a close eye, of course, on the stock performance in the coming hours. In the meantime, let's check in on the markets in Asia as well for you. Juliet Sali is back with more from our Singapore studio. Jules.
Yeah, of course, all awaiting the FOMC, Yusuf, and it was a little bit of a cautious start to the day's trade here in Asia. We've also just been getting an update from the Hong Kong Financial Secretary, Paul Chan, on the lunch break in Hong Kong. He is saying that they see year-on-year growth in the first quarter GDP, ending a decline. The Nikkei is up by about 1/3% as we see yen weakness. We had strong retail sales there too. South Korea's market, though, being dragged down by SK Hynix after its results. And Indian stocks are higher for a third day, even though we know the concerning virus case situation there. Australia's market up by 0.4%, brushing off weaker than expected CPI data, but that has affected the Aussie dollar. If we just have a quick look at how the Aussie is trading, first quarter CPI missing economist estimates, slower than expected, and you also then had Westpac's Bill Evans saying that the RBA will extend QE and shift the yield curve control to November 24. He's often right. The market is obviously listening to that and that weaker than expected print from the inflation numbers, Yusuf.
Jules, we broke the Hong Kong Exchange earnings early on in the program. You've had a chance to take a closer look at the numbers and also some investor reactions.
Yeah, we knew they were going to be good. There's been some strong demand for IPOs in Hong Kong. You think of the likes of Bilibili and Baidu, and certainly coming through with a beat here from Hong Kong Exchange, which is on the lunch break. But we have seen 22 buys, 9 holds, 2 sells on this stock. So as my chart shows, the outlook from analysts just keeps getting better. Net income rising 70% to $495 million US. This is on the back of a 35% increase in core revenue, and it is the last earnings period before the former JP Morgan Chase & Co. CEO Nicolas Agazan, or executive I should say, takes the helm from Charles Lee, who left at the end of last year. We are, though, hearing from Bloomberg Intelligence that you could see momentum in some of this IPO pipeline slow since the first quarter. They're also seeing average daily stock turnover sliding about 27% in April. But certainly these numbers very strong. Hong Kong exchanges up by almost 100% over the past 1 year. Yusuf.
Thank you very much. That's Juliet Sali there. Now, despite strong numbers, UBS announced a surprise hit from the collapse of Archegos. Swiss lender absorbed a loss of $774 million in the first quarter and is expected to see an $87 million hit in the second quarter. The CEO, Ralph Hamers, spoke about it with my colleague, Manus Krajnik.
We're very disappointed at the situation. We're taking it very seriously. We're reviewing the different prime brokers relationships as well as the GFO, the family office relationships, reviewing the risk management processes as well in order to get the lessons learned out and make sure it doesn't happen again.
Will you reduce leverage and reassess how you lend to the prime brokerage or to the family offices?
Well, I think if you take the lessons learned up to now, there is certainly two elements that we are picking up. So the first one is the level of transparency in some of this business, as well as the concentrated positions that were built up vis-a-vis the leverage, I guess. So it's a combination of those that we have to take into account going forward.
Will you demand greater transparency from those family offices going forward?
Absolutely, absolutely. That's the big lesson learned here. It's not only that we should demand it, and all banks should demand that, it's also that we should look at regulations to come in here in order to ensure that an idiosyncratic event like this doesn't happen again.
Will you cut leverage to the hedge fund business in the investment bank?
Not necessarily. I do think you have to be very selective and very prudent around that. We have strong client relationships. We have a strong business here. The prime brokerage business itself is strategic to us. The capabilities.
You're still fully committed to PB?
Absolutely. The capabilities underlying prime brokerage business are important to build up your wealth business going forward, and therefore we're committed to it strategically. But again, we have to take the lessons learned and make sure that we do it good for going forward.
Ralph, $774 million is $750 million. You're going to do a conference call. Why did you not disclose this number sooner?
Well, you're referring to a gross number. The net number is 434. In view of the very strong first quarter results, we felt it was not required at the time.
The UBS CEO, Ralph Hamers there. We've got still a lot more heading your way. This is Bloomberg.
Countries that entered this crisis with limited fiscal space, with more vulnerabilities, need to be supported for the benefit of the world.
The transparency of the debt burden for the poorest countries needs to be increased. There needs to be fuller disclosure.
Danish transport and logistics firm DSV Panalpina has agreed to buy Agility, Public Warehousing's global integrated logistics business, for $4.1 billion. Will extend DSV's reach in the air and sea transport industry. For more details on the purchase, let's get out to Tariq Sultani. He's the CEO and Vice Chairman of Agility. Tariq, just run us through then some of the motivations behind this deal as far as you're concerned.
Well, it was clear to us, it's been clear to us for a while that if we really wanted to grow and do well in the supply chain space, we needed to either get bigger or to join a bigger group. And I think having a company the quality of DSV that shares a lot of the same values that we have on sustainability, et cetera, really gave us that opportunity to quickly take advantage of scale, because there's a clear relationship between scale and performance in the supply chain world.
What about TriStar? Is that going to be part of the deal as well?
TriStar and the infrastructure with agility.
Okay. What are you seeing in terms of the broader recovery? How is that trickling through to the numbers that you're seeing and your network?
So, obviously, we're still dealing with the constraints of COVID. The supply chain world it is a little bit like traders when it comes to volatility. These constraints and volatility are good for creative supply chain people. So, the situation presented by COVID has clearly, we've been operating under some serious constraints, but at the same time, it gives talented people the ability to come up with creative solutions that drive superior performance. And I believe DSV are actually performing exceptionally well at this time.
I mean, you get a massive infusion of cash off the back of this deal. You talk about some new possibilities for opportunities. Where are you likely to look for them? I mean, what's going to be on your radar in the coming months that you might say, you know what, that's worth picking up?
So the interesting thing here is we've been obviously investing in the supply chain, both in infrastructure, services, and technologies, disruptive technologies around the supply chain. That's really our focus, and nothing is really changing here. We're actually receiving an exchange for our logistics business. We are receiving a block of shares in DSV, roughly 8%, when we'll be participating in the board of DSV. So, if anything, we are continuing our focus on the supply chain, and we believe that we've made our commitment. We've doubled down and made a renewed commitment to investing in the supply chain and emerging technologies around it. So that's one part. The other part is obviously having the scale of a company like DSV as a partner really adds value to anything that we do in the world of technology, the world of infrastructure. There's clearly a much broader potential for partnership that can benefit both sides.
Yeah. Tarek, thanks for running us through that. Appreciate the time. That's Tarek Sultan. He's the Agility CEO and Vice Chairman. Well, let's stay with some of the corporates, because shares in the Turkish air operator TAV soared the most since December yesterday. And that came after the company posted a first quarter net profit of 547.9 million liras. Expectations had been for a 376.7 million lira loss. Stock was also upgraded by ATA Invest. Joining us now to discuss the results and the outlook is the Vice President and CFO, Burcu Geriş. Burcu, welcome back to the program. Just give us a bit of a sense of how this last quarter has evolved and where you're seeing strength in the recovery.
Good morning, Yusuf. Thanks for inviting me. So, yes, we just announced our results yesterday. And of course, COVID is a very hard period for everyone, but especially for aviation and tourism sector, obviously. We suffered a lot. Our passengers dropped by 59%. Our revenues dropped 49%. But even through these times, we managed to get the company in a good space by cutting costs, getting time extensions, etc. And for the outlook, we are quite positive, especially for this summer season. We are taking, as a country, all countries are taking the precautions, but Turkish airports and Turkish economy is very dependent on tourism, obviously. So in order to prevent the number of cases from increasing, now there's a total lockdown in Turkey for the next 17, 18 days. And this we expect this to impact the numbers very positively in terms of the tourism and passenger numbers for the outlook of this year.
Burcu, we'll flesh that out in a moment. Just hold that thought, because we're getting a breaking line through from Banco Santander. It is a congested hour in terms of corporate announcements. So the key line here for the first quarter net income is at 1.61 billion euros. The market has been looking for 1.21 billion euros. So that is a comfortable beat. They're going to name Antonio Simoes as the Spain's CEO, and we will wait to get more details in the next few minutes. But I want to return to Burcu Geriş from TAV Airports. Burcu, you talked about some of the challenges that you're going to be facing. I want to look at some of the opportunities, though, specifically around Asia. You have your Kazakhstan experiment. I wonder whether we're going to get more of that, whether you're going to be branching out.
Yes, exactly. I mean, I'm happy to announce that we will close the Almaty deal tomorrow, hopefully. So Almaty is a very important addition, an asset to our portfolio. So we will close this deal and take over the asset by tomorrow. And our continuous interest in the region is there. In all CIS countries, in Asia, in Africa. We haven't stopped our growth. We think, of course, this period is temporary. So it's a pandemic period, but it also brings its opportunities with it. So we are active in Asia, in Africa, and Eastern Europe. So Montenegro airport tender is coming up. We are interested in that. A couple of airports in Africa. So we will continue to grow and look for new opportunities.
We also have the unfolding crisis around the coronavirus in India specifically, where there's a real struggle that's taking place, and there are concerns that's going to start disrupting international travel demand, production capacity, and all that. Burcu, how is that likely to weigh on some of the traffic as far as you can see at this point?
I mean, these types of events, of course, happen, and in aviation, it has some impacts. But in the medium term, in the long term, all of them are recovered very easily and very fast. So we are not too much worried. Of course, we are going through still volatile times, hard times, but we think the comeback is really always, it has been very strong, and it will be strong again.
That leads me to my next question, is whether there's an evolution perhaps in the split between sort of domestic routes and international destinations. Is there something that stood out to you and that's likely to perhaps materialize into a trend?
Yes, very good point. Actually, the traffic recovery throughout, the passenger traffic recovery throughout the world will not be symmetrical. So we can see that domestic traffic recovers faster than international. Short-haul traffic recovers faster than long-haul. Touristic travel recovers faster than business, because people will continue maybe to make those video calls, but so they will not maybe travel as much for business, but they will continue to travel for leisure. And there's a lot of pent-up demand for people locked up in their homes for a year. So there is this pent-up demand which is ready to explode. So in our portfolio, we are advantageous in a way that we have a lot of leisure airports, short-haul, domestic and international. So we will take advantage of that, hopefully.
You've received some government support, as have other players in the industry. I wonder whether you would say at this point you're covered, as you've indicated in the past. Would you say that nothing more is needed, or would you say that there are some fronts, perhaps not just on the financial side, that the government can assist with?
Yes, so there is this short working allowance scheme the government has in place, which has helped us because the government paid the employees on behalf of the companies. So this had started last year, and it was extended now to the end of June. This is very helpful, obviously. This is throughout all the sectors. There are additional measures that would be required, and I think the government is continuously looking at different ways to support the tourism industry, because, as I said, tourism and aviation is very important for Turkey, for the growth, for the economic growth, and for the GDP. So they are, even as we speak, they are looking at additional measures. So far, what has been done has been very useful, I can say that, but we would need this to continue.
Burcu, thank you very much for getting up early for us and giving us those updates. That's Burcu Geriş. She's the VP and CFO at TAV Airports. Well, I want to get back to the lines we got from Santander and really fill the picture out for you, because yes, Your first quarter net income came in at 1.61 billion euros. The estimate was for 1.21 billion euros, but the other lines are on net loss provisions, 1.99 billion euros. That is for the first quarter. Net interest income at 7.96 billion euros. The market had penciled in 7.84 billion euros, so that is much closer in line for Banco Santander. They're also booking a 530 million euro cost in terms of restructuring for the year 2021. So that sets us up for quite an intense conversation over the coming hours in terms of the direction of the bank and some of these capital allocations vis-a-vis their peers on the European continent. We will be across the story, of course, throughout this morning. In the meantime, let's get to Saudi Arabia's Crown Prince. As he says, the kingdom is in talks to sell off a 1% stake in the state oil giant Aramco. But this time, the country may choose a private buyer rather than the public markets.
There's going to be something very soon. There may be a sale to key main investors that will be announced in the next 1 or 2 years. I don't want to give any promises about deals finalizing, but there are discussions happening right now about a 1% acquisition by one of the leading energy companies in the world. This deal could be very important in strengthening Aramco's sales in the country where this company resides.
Let's get some more analysis with Florence Oakton. She's the CEO, chief economist, and founder of Arabia Monitor. Florence, it's been a long night. I mean, the interview was in excess of an hour and a half and covered everything from foreign policy to unemployment to, a wider social debate. So let's zero in then on the Aramco lines to begin with. Does that sort of make sense to you in terms of the wider diversification strategy that you've always said that the kingdom should yearn towards?
Absolutely. This was the obvious next step. They had said initially that they were going to privatize Aramco in stages, and this is now the next stage, having divested recently some of the non-core assets and found appetite in the market for it. What is interesting about the announcement is what he says. To me, he said something about being able to boost Aramco's market share in the country where this potential buyer is located. To me, this sounds like it's a shift to Asia. It sounds like that potential buyer could be a large Asian buyer. It makes me think of China. It makes me think of India. Those are the markets that have more absorptive capacity for Aramco's products. So very interesting announcement indeed.
What about some of the other ambitions around unemployment? I mean, 11% currently. He says, you know what, that could go down to 7% by 2030. And in many ways, it felt like an inflection point for the Crown Prince, that he was trying to create a new stage beyond 2030 even in terms of where he sees the kingdom and where he wants to direct resources.
He continues to be very forward-looking. Whether it will be 7% or 8% or 6% by 2030 is really hard to say. However, the quantum of the change that he's looking for remains extremely ambitious, as we all know. As I've said before on your show, I was quite impressed by the continued momentum through the pandemic coming out of policy making in the royal court in Saudi Arabia. They remain dynamic. Decisions and announcements have been made continuously, and obviously they are encouraged by where oil prices are today. And so the price of oil for 2021 could in fact deliver a very good growth rate for Saudi Arabia, which could resemble a V-shaped curve, as he has said. Excuse me.
I mean, the other thing that stood out to me, Florence, is his comments around Iran, and we put this up on a board this time. In the end, Iran is a neighboring country working today with our partners in the region to find solutions to these issues, and we hope to overcome them and have a good and positive relationship with them. So even on that front, they're trying to make even more progress. Where's the Achilles heel going to be here, though? Where could the chink in the armor be, as far as you could tell?
Well, first of all, these are major, major developments. There are major geopolitical fronts shifting in the region. One is Libya, the other is the Saudi Arabia-Iran axis. And this goes back to what we have said before on your show regarding whether a return to the JCPOA will in fact entail a return to more or less the same deal, a worse deal, or with some luck, a better deal, meaning one that includes regional considerations. Because as you know, the JCPOA in its initial iteration wasn't a very good deal for the region. No one liked it in the region because it didn't make any effort at trimming some of Iran's tentacles in thorny areas like Yemen, like Lebanon, meddling in Bahrain, etc. All of these things are real. And so now it's actually quite exciting because Saudi willingness to speak to Iran again and vice versa indicates that directly or indirectly there could be a regional component here.
We had OPEC Plus as well overnight then confirming a supply addition. They're seeing demand recovering. I look at what's going on in India. You kind of wonder whether that was the right thing to do.
It's difficult to say at this stage. They had made the decision at the beginning of April that they would put 2 million barrels back onto the market. Now, this is 2 million out of 8 plus 1, the million barrels taken off by the Saudis, so 2 million out of 9. It's difficult to say. I think that there is a chance that the Indian problem could remain localized to India and counterbalanced by recovery from China, which has been impressive. It's hard to say, but they certainly made the decision to proceed, as we all know.
Fantastic. Florence, thank you for that. That's Florence Idogten, the CEO and Chief Economist at Arabia Monitor. Let's get you some more breaking lines, then this time from Deutsche Bank. They're coming in with a profit, and it is the highest quarterly profit since 2014. That is your red headline. The pre-tax coming at 1.59 billion euros. The estimate was for 989 million euros. So that is a huge beat then in terms of what the market had been anticipating. Deutsche Bank has been going through a series of changes and restructurings. So this perhaps indicating a bit of a green shoot. I'm looking here at some of the other numbers that we're all going to break down with Daybreak Europe next. This is Bloomberg.
If you can just scan all the incoming mail, all the incoming luggages, it's going to be a massive time saver. And it means that we can capture a lot more of the illegal wildlife trade that's currently going undetected.
focus is odor detection. And this is because no matter how you're bound, what container you're in, you're still producing and releasing odors. And we're kind of building off of wildlife detection dogs.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
Good morning from Bloomberg's European headquarters. It's 6 a.m. in the city of London. I'm Anne-Marie Hordern. This is Daybreak Europe, and here's what you need to know. Global stocks steady as investors wait to hear from Jay Powell and the FOMC. But first, corporate results in full swing. Deutsche Bank reports its highest quarterly profit since 2014 and raises its outlook. Alphabet revenue smashes estimates and buyback plans boost the stock after hours. Microsoft also beats the street, but not enough for investors. And U.S. President Joe Biden will give his first address to a joint session of Congress. We look ahead to his priorities and his vision for America, nearly 100 days on the job. Very good morning to you. We have more Deutsche Bank results just coming through. I know Youssef gave you some of those top lines, but really what's looking out to be in some of these headlines crossing the terminal, a blowout quarter for Deutsche Bank. First off, they're raising their 2021 outlook. They're forecasting flat group sales, though. And then this quarterly report was the highest profit they have seen since 2014. That is 7 years. Clearly boosting some of those profits was the FIC revenue. That's up 34%. Versus 17% was the Wall Street average. We have a great T-Live blog happening right now. Some of our reporters like Eric Coleman, Nicholas Comfort are across it. One thing that crossed my eye was what Nicholas Comfort was saying. Yes, it's the highest profit in 7 years. They're also setting aside, Deutsche Bank, 300 million euros for future shareholder dividends. As Nicholas Comfort says, not much for a bank of its size, but shareholders haven't received a dividend from Deutsche Bank since May of 2019. So really a stellar quarter, especially at the investment bank. Profit before tax was 1.5 billion euros, up 134%. Yes, that's right. Triple-digit percentage growth there when you look at the investment bank profit before tax. So a very good quarter for Deutsche Bank. We're going to be speaking to the CFO in less than 30 minutes time right here on Bloomberg Daybreak Europe. You do not want to miss this conversation after this stellar report coming out of Frankfurt. It's another huge day for corporate results across Europe. This morning we're going to be speaking with Santander, WPP, Sanofi, Delivery Hero, and of course that big interview with Deutsche Bank. You do not want to miss our results season, really the executives from across sectors this morning. Just 2 minutes after 6 a.m. in the City of London, let's take a look at where we trade this morning. Global equities fairly steady this morning, unchanged across Asia. Green on the screen when you look at the futures across the U.S. and the European equity market. It's a big day today for central banks and policy. We're going to hear from President Joe Biden, nearly 100 days in office. Also, Jay Powell is going to be speaking as the Fed wraps up their two-day FOMC meeting. And also, Christine Lagarde is going to be speaking at the Aspen Institute. So a slew of speakers to watch this morning. Board number 2, let's look what's going on across asset. We're seeing a little bit of selling in the Treasury market. Yields come higher, about 1.63% on the 10-year. Brent crude, $66. It was supposed to be a JMMC meeting yesterday, but they decided just to have an OPEC meeting. And they decided they're going to keep an eye on India and the demand situation, but they will still continue to supply more to the market. They think the market can handle it. And commodities has been on an absolute tear. I put copper in there because Goldman Sachs saying $11,000 a ton. That's where they see it going. And they see commodities rallying 13.5% in the next 6 months. We've also had earnings season with executives joining these earnings calls talking about prices increasing and that is being passed on to the consumer. What does this all mean for inflation? We'll hear from Jay Powell today. But joining us now to discuss a number of things happening in a very big week is Caroline Simmons, UBS Global Wealth Management UK Chief Investment Officer. Caroline, I want to start with the earnings results because we just had a pretty stellar quarter so far as from what I can see in these headlines dropping from Deutsche Bank. What do you make so far? Because from what I've seen, the results have been quite good, but global equities kind of shrugging it off.
Yeah, I think it's going to be a very strong quarter for the earnings growth. We're obviously lapping the weakest part of the sort of pandemic reporting from the companies last year. And you know, it's a maximum momentum from an economic perspective this quarter. So we will see that reflected in the companies. Obviously, this is expected. Everyone knows that we're lapping weak comps. So to an extent, the market has started to price it. But I think we will still see some share price moves, particularly around companies who are able to provide better guidance around sort of cash returns, share buybacks, dividends. There are a few sectors where those were cut last year, and investors will be looking to see for the positive news flow in those areas.
It's interesting because we had UBS yesterday. I know the standout was, of course, that nearly $800 million they're lost given to the Archegos. Deutsche Bank today, an incredible quarter. Deutsche Bank used to be the bad boy bank of Europe. Now it seems to be UBS. When you look at European banking space in general, is this as good as it gets given the low yield environment?
I think there's a few things that are starting to come through for the banks. Obviously, the market volatility, which we think is going to remain through the course of the year, is particularly helpful for the banks that have sort of investment banking trading arms. So that's one area. The loan loss provisions were pretty high, and given the levels of support that were provided through the pandemic, those loan losses are coming in at much lower levels. So I think that's something that's going to stay with us for several quarters on the banking side. And then, of course, we have had a bit of a move up in yields. They're still low by historical standards, but they have moved in the right direction, if you like, in terms of being helpful for the bank net interest income.
I want to move on to a report you have that's actually just dropped 6 minutes ago. Investor Insight. You say 40% of investors are looking to increase stock holdings. What's driving that 40%?
Yeah, I think it's a combination of improving outlook on the economy, improving confidence in their businesses. So we survey investors and business owners. When we look at the sort of outlooks for their own areas and their own economies, people are feeling more optimistic than they were, say, a quarter ago. There's also a concern around staying in cash. And 50% of investors are worried about the inflation erosion of cash holdings. So that's also pushing some people to want to continue to invest. And dare I say it, the fact that equity markets have probably been positive may also be having an influence on some people's thinking.
Yeah, cash forms 22% of portfolios globally, according to your report. That's still quite a lot. If they don't move into stocks, what else are you seeing investors interested in?
Yeah, it is still high as versus what we would, recommend, but it is, coming down, and people are focusing on being invested. As you said, global equities is a big region. Technology space is an area. 70% of investors said they feel that technology is an area that they really need to get more involved in. Sustainability, 63% of investors said sustainability is going to become a more important part of their investing in the next year as well.
Also, the next 6 months on, there's going to be quite a lot of optimism, it looks like, in the equity space. At what point do you think investors are going to say, okay, we've reached very high valuations? I mean, every other day we're hitting fresh highs in the S&P 500, and they think it's time to just sell. Is when we see economies fully reopen, is that the sell sign?
Yeah, I think the nervousness around markets will come, I think, more in the second half, as you say, once we've got the full reopenings, and then once the economic momentum starts to slow, and we get into the territory of talking about potentially tapering some of the monetary stimulus, and some of the fiscal packages may start to be tapered down as well. I think that's when people will start to kind of reassess what is the direction of the equity markets. Our view is that they're likely to continue to rise even in the second half of the year, but perhaps not as strongly as they have in the first half.
The other thing we've, of course, been seeing through, you mentioned inflation, on these earnings calls, executives are talking about, from Chipotle to Procter & Gamble, they're talking about price increases. I mean, you can see it in soybeans and copper, all these commodities, these raw materials are just on an absolute tear that's being passed off to the consumer. How much inflation do you expect in the second half of the year?
Yeah, we think inflation is probably going to be peaking sort of now for the next couple months. Obviously, we are lapping again these very weak levels, particularly on commodities, and so that will be feeding through. You know, we're going to run above target for this year in the US. And probably next year in the UK, but only a little bit above target. And we think it is a temporary inflation overshoot, and it will be coming back towards the target, certainly in the time horizon that the central banks are looking at, which is why we don't think the central banks are going to do anything about the inflation overshoot, nor do we think investors should be doing anything about it in terms of being concerned about the impacts it might have with regards to equity markets or potential taper tantrums. We think that moderate inflation is actually very supportive for risk assets.
Caroline, hold that thought on temporary inflation, because Jeffrey Gundlach spoke to our colleagues in Canada, and he said that the Fed doesn't know if it's transitory. And I want to get your thoughts on that, and we're going to hear from him in just a moment. Caroline Simmons, UBS Global Wealth Management UK Chief Investment Officer, stays with us this morning. But first, a recap, your First Word News with Simone Foxman in Doha. Hi, Simone.
Hi, Anne-Marie. In the U.S., President Joe Biden is urging Americans to get vaccinated. He's pointing to new guidance that people who've been inoculated can socialize outdoors without masks. The change in rules might help convince people who've been hesitant about getting their shots. According to Bloomberg's vaccine tracker, 40 million Americans have had at least one dose of the vaccine. The European Commission wants the power to levy fines or block deals by foreign state-owned companies. The proposed rules obtained by Bloomberg seek to answer complaints from European businesses that Chinese state-backed firms get the support they can't match. Chinese business groups have already complained about the draft, which could change before it's set to be proposed next week. Google's seen a surge in ad sales as businesses look to capitalize on the economy reopening. First quarter revenue for the parent company, Alphabet, came in at over $45 billion. The firm also unveiled a $50 billion buyback, sending shares higher in extended trading. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Anne-Marie.
Simone Foxman in Doha, thank you so much. Just ahead in the program, as the Fed decides, will U.S. inflation prove to be transitory or something more permanent? How many times have we heard that? Double Line Capital's Jeffrey Gundlach weighs in. His thoughts next. This is Bloomberg.
BSO Now is your online home for brand new Boston Symphony Orchestra and Boston Pops performances. Discover new releases each week that include behind-the-scenes storytelling with conductors including music director Andres Nelsons, guest composers and musicians, plus critically acclaimed archival concerts and more. Visit bso.org/now, where the music plays on. BSO season sponsored by Bank of America.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
We don't know. Nobody knows. Most concerned about the fact that the Fed thinks they know. There's plenty of indicators that suggest that inflation is going to go higher, and not just on a transitory basis for a couple of months. So we'll see. That's how I think the Fed is trying to paint the picture, but they don't really. They're guessing.
Jeffrey Gundlach of DoubleLine Capital weighing in on the U.S. inflation debate in an interview with our colleagues BNN Bloomberg. So will U.S. price pressure prove temporary, or could the money printing and rising commodity prices flagged by Gundlach translate into something more long-lasting? That will be the key question for the Fed as it weighs its third policy decision of 2021. The FOMC all but certain to hold rates near zero and repeat its vow to keep buying bonds at the current $120 billion monthly pace. Let's get more with Bloomberg's Mark Cudmore. Mark, clearly going into this meeting is this dilemma of the commodity prices. Who's right, Jay Powell or Jeffrey Gundlach?
Well, I think Jeffrey Gundlach's right in this case, that the Fed don't have a clue. I don't think that they're deliberately, kind of obfuscating. They need to deliver a dovish line, and they've been adamantly dovish, and that's part of the problem going into tonight. That's part of the dilemma, is that they must be completely dovish, otherwise they risk upsetting the apple cart and disrupting markets and disrupting all the good work they've done up till now. So even though they don't really know it's going to be transitory, Gundlach's absolutely right. They have no idea what inflation's going to be like in a few months' time, but they must stay dovish. The problem is tonight is that commodities are putting them under a lot of extra pressure. There's a risk that if they keep that dovish line, which they have to do to not disrupt markets, then in a couple of weeks people are going to go, hey, wait a sec, you're risk losing credibility. Inflation measures, whether you look at 10-year break-evens, whether you look at 5-year, whether you look at the underlying price index from the Fed, all of these inflation measures are rising to multi-year highs and showing no sign of stopping. So there's a real problem for the Fed tonight, even though I actually expect them to not change the tune.
Yeah, I agree with you, though. It is going to be a problem in terms of what Jay Powell says. On the commodities note, Goldman now is seeing oil hitting $80, copper going to $11,000 a ton, 13.5% on commodities rally in the next 6 months. How is all of this today, with what is currently happening in the commodity market specifically, going to play out?
It's a great question. If Goldman is correct and we see those continued commodity gains at such strength, yields are going to be an awful lot higher. And I think that will be very disruptive across markets. But I think that we'll see the 2% 10-year yield in nominal yields be blown away if that is correct in commodities. Now, what it means for real yields is, well, they'll still be probably negative, or, still will definitely be negative, but they may be only a little bit less negative. So it'll be a supportive market for risk assets still, because real yields will actually be negative, even with higher nominal yields. But the path there will be much more volatile. When we get the next spike in nominal yields, it'll be very, very disruptive to markets, at least in the short term.
All right, Bloomberg's Mark Cudmore, thanks for joining us, and he'll be joining Anna, of course, in about 45 minutes' time. You don't want to miss the European Open. Caroline Simmons, though, is back with us, UBS Global Wealth Management UK Chief Investment Officer. Caroline, you just heard what Mark had to say. What's your take? Who's correct, Powell or Gundlach?
Yeah, we're in the Powell camp. We think the inflation pickup is largely temporary, a lot to do with the base effects and timings, and it will work its way through as we go through the course of the year, and particularly the excess capacity and the output gap that's still there in economies and employment or unemployment levels as well are likely to bring inflation sort of closer to targets over time. But of course, it is a big question. We don't know for sure. We're positioned between a sort of reflation trade, which does tap into slightly higher inflation and higher yields, but also the value style which we think will continue to rotate, and cyclical sectors. So, when we think about what's driving inflation, we have obviously the commodity pickup, we have the supply-demand mismatches as we're coming out of the pandemic. Those should sort themselves out. But then we have some more structural changes, which we don't know quite how they're going to play out. And that's the combination of the fiscal and monetary stimulus at the same time, which we've never had on such an unprecedented scale. It's to do with the sort of aging populations that we've got and the debt levels that we've got, and how do we deal with those? Again, these are not dynamics that we faced at this level before. So, I think it isn't certain, but what is sure is that it is easier for the central bank to react to rising inflation than to below target inflation. So they're likely to let inflation run, above their new average inflation targeting levels for some time before they feel the need to act.
What about at least talking about tapering? We just had a survey out that many are expecting it to happen, at least the talk of it, before year end. When do you think we'll hear from the Fed about pulling back a little bit on that $120 billion?
Yeah, I think probably around the autumn time, we're going to start to get more messaging around the tapering from the Fed. And, it is something that's very debated, isn't it? When are they going to start talking about tapering? When are they actually going to do the taper? It's clearly something that we and markets will be keeping a very close eye on.
There's also, besides Jay Powell, of course, we're going to hear from President Joe Biden, about to mark 100 days in office. You guys also have a great note out about this, and you say the overall investors are bullish on the administration's impact on the U.S. economy and on global markets. I think it was some 60-something% about the impact on the economy and 50-something% on global markets. At what point do you think rises in taxes could derail this optimism?
Yeah, I think as long as employment continues to improve and economic growth improves, and obviously the vaccine rollouts, which have significantly picked up pace, continue along their path as well, I think these things are continuing to sort of remain very supportive for investors and business owners. At the moment, a lot of the tax raises are being focused on the corporate sector, so I don't think that has much of an impact necessarily on the sort of retail investor. So I think we're a while away from sort of tax rises causing concerns for people. There's so much positive news at the moment, and I think people are really wanting to focus on the positive after what's been a very difficult year for most people.
It is positive. CDC is now even telling Americans when you're outside, you can loosen up wearing your mask. But your research also says 87% of U.S. investors believe the current issue should be controlling COVID-19. How much is U.S. exceptionalism reliant on other economies opening up and even controlling the virus? I think of the harrowing images coming out of India.
Yeah, it's... clearly a global pandemic, so we do need sort of global, I was going to say solution to the pandemic, but, a global suppression of the virus in order for it to be maintained. Otherwise, you can easily just have pockets transferring again from one region to another. On India, I would say there have been some encouraging signs in some of the sort of leading regions sort of economically. So Mumbai, for example, the case counts already started to turn. They have been the leading indicators for the virus so far. So hopefully it's a sign of better things to come in India. And yeah, there's an element, as we've seen in the UK, that you can control yourself and you get a certain amount of economic pickup when you, can lift your own restrictions and your own populace can travel about and do their business as they want. But there is also an element in an interconnected global world that does require, reliance and interflows and exports with other regions. And, for that, we have seen some disruption during the pandemic, but hopefully that's starting to lift a little bit now.
All right, Caroline Simmons, thank you so much for your insight this morning. UBS Global Wealth Management UK Chief Investment Officer. Just ahead, we will stick with what's going on in India. President Biden pledges vaccines to help fight India's deadly second wave. The latest from New Delhi and Mumbai next. This is Bloomberg.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Good morning. This is Daybreak Europe. I'm Anne-Marie Hordern in London. Manus Cranney is off today, but he'll be back tomorrow. Now, India's second wave of coronavirus continues to worsen with no clear end in sight. International aid is en route with desperately needed hospital equipment making its way to the country. President Biden has said he intends to send vaccines from the United States to India, but didn't specify timing for decision or shipments. Here at the latest is Jeanette Rodriguez, Bloomberg's Mumbai bureau chief. Good afternoon, Jeanette. Thank you so much for joining us yet again on the situation in India. I looked at what's going on in New Delhi, a population of some 20-30 million people, and the hospital count for the vacant ICU beds, 21 only. Has anything changed? Are we moving at all in the right direction?
Aid is coming in fast from within the country as well as from outside, but patients are also rising equally fast, if not faster. India today reported a fresh record of new infections. Deaths have crossed the unprecedented 3,000 number per day, and we have to remember these are probably vastly undercounted numbers. The true figures are probably much, much higher given India's breadth and extent. You spoke about the situation in New Delhi, which is currently the worst hit place in India. And remember, New Delhi is not just catering to its own population, but because it is a landlocked city, it's catering to populations from other adjoining states as well. So the hospital, the healthcare system is completely overwhelmed.
Jeanette, do you have a sense of what exactly will be coming into the country? Is it oxygen, the vaccines, and the time frame of this to know how much of a difference this will all make?
So different countries have pledged different things. Oxygen is, of course, coming in from the UK plane, started coming into India yesterday. India's own companies have started diverting oxygen from industrial purposes toward medical use. Other big pharma, for instance, has pledged to allow Indian manufacturers to take licenses for certain key drugs. The biggest hope, of course, is President Biden saying the U.S. will give us AstraZeneca vaccine. As you correctly mentioned, we don't yet know the timing of that. Also, even if the U.S. sends its entire stock of 60 million doses, that's probably vastly undersufficient given India's population. The best bet is that Indian manufacturers, India is the world's biggest manufacturer of the coronavirus vaccine. The best bet is that India's own factories get essential raw materials from the U.S. and increase local manufacturing.
That is really why, Jeanette, why I hear everyone say India matters so much as well, because it is the hub to manufacturing the vaccines that are going around the world. Our thanks to Jeanette Rodriguez for continuously joining us, and we hope she stays safe in New Delhi. Let's get a quick check on where we trade in the markets this morning. Relatively steady across global equity markets. You can see there on the board, it is green on the screen as we await Fed Chair Jay Powell. Also, Christine Lagarde will be speaking today at the Aspen Institute. And of course, we have nearly 100 days in office for President Joe Biden. He'll be speaking. And across assets this morning, we do see yields come a bit higher on the 10-year, and then an absolute tear in the commodity space. This is what Jeffrey Gundlach was talking about. Mark Cudmore, you heard from him. He said he's in the Gundlach camp, but Caroline Simmons says, no, she's in the Powell camp. She does see this as transitory. Gundlach says, how does the Fed know that this is going to be transitory? Slew of earnings we're keeping an eye out for as well. Deutsche Bank this morning. What a standout first quarter results. Bank has highest quarterly profit in 7 years. They're also raising its 2021 outlook. Debt trading revenue up 34%. The street was looking for 17%. That was the average. And our Daniel Schaefer from Bloomberg News spoke with Deutsche Bank CFO. Take a listen.
Quarter across the board for the company. So the profits were the highest in 7 years at $1 billion after tax. And frankly, all four businesses performed well in their environment. Of course, it was an outsized performance for the investment bank, as you've seen for us and our peers, with over 30% year-on-year increase in revenues. Strategically, really no change. We're executing on our strategy. We have been in the process of, in a sense, strengthening the franchise quarter after quarter, getting better and better client engagement, and frankly, executing on the strategies that Mark Fedorsik and Ram Nayak set out, I think, very clearly at our Investor Day in December. We're seeing the implications of that, but it doesn't represent a change in strategy, rather a strong execution of that strategy in favorable market conditions.
Okay. You've said before that this year will be about increasing the top line, and it will be a year of investment as well. There have been hires in certain areas like the SPACs business, for instance, and some areas of trading. Will headcount in the investment bank increase this year in the full year?
We've talked about making selected investment. As you mentioned, by the way, we are calling now for revenues in the investment bank to be in line in 2021 with where we were in 2020. And again, that's encouraging. It's mostly the impact of a strong first quarter coming through. But it does, of course, give us the confidence to continue in making the selective investments that we laid out for investors back in December. It's all within, if you like, our wheelhouse, so our strengths and selected client areas of focus where we think we can compete and win, but where there's still some room to build and improve our market share, improve our ability to support clients.
Can you give examples of those areas?
Sure. There have been a number that we've looked at. We have made investment in European government bond trading, and we've seen the benefits of that. We've been making and looking at hires in the U.S. in our rates business, and also credit flow globally, all of which are strengths of the firm and where we think we can continue to build. But remember, it's within the sort of appetite and strategic direction that we set for ourselves several years ago, but have reaffirmed for investors in our last two investor days.
Okay. In terms of the investment bank, has the positive momentum that you've seen in the first quarter, has this continued into April?
Look, we saw already in the first quarter the normalization that people had called for. We'd seen some of that in the first quarter, and we say particularly rates, FX, emerging markets have begun to normalize. And we see that continuing now in the month of April that we have behind us. We do continue to see strong pipelines. We see activity sort of continuing into the second quarter. So it's, remember, a very difficult comp for the industry in the second and third quarters, because those were particularly buoyed by the environment that we had last year. Nevertheless, we see a sort of encouraging ongoing activity.
So we won't have a similar pace as we've seen in the first quarter?
We would not expect a similar pace to the first quarter.
Okay, and that's for the trading business, or in particular, or
trading in particular. Banking, I think, continues to see relative strength. I think at this point, the year-on-year wallet is probably ahead of last year, going towards flat. So I think we're still seeing a healthy level of activity in the corporate finance businesses.
Okay, the SPACs business, is that slowing down a lot?
We would expect to see a slowdown in new special purpose acquisition company issuance. We've obviously had a boom and benefited from that in our business last year and in the first quarter this year. For us, it's a business we've been in consistently for a very long time. So it's obviously gratifying to be able to benefit from the boom. But we see it as as one financing vehicle among many that we've consistently supported.
Has there been any impact from Archegos? UBS said yesterday that they're reviewing their prime brokerage unit and the wealth management clients because of that. Are you doing something similar?
So first of all, we did see an event with a prime finance client late in the first quarter. As we said, we were able to exit the collateral positions without a loss. In fact, we were able to return excess collateral to the client. We're very pleased with the way our risk management function through the process, both in advance of the market events and then in the liquidation and managing through that event.
Deutsche Bank CFO James von Moltke there speaking to us a little bit earlier. Some top lines coming out of this. One of them definitely is that he does not expect the second quarter market momentum to match the first quarter. He said the first quarter, great first installment in the dividend plan. I'm sure that's going to be certainly welcomed by investors. Also just reiterating the fact that this is this quarter, the bank has the highest quarterly profit in 7 years. Also, they're raising that 2021 outlook. So you have to hand it to Deutsche Bank. Christian Saving said he's going to clean up the bank. They do seem to be making a turn. Let's get a recap of your First Word News now with Simone Foxman in Doha. Hi, Simone.
Hi, Anne-Marie. Sources tell Bloomberg that President Biden isn't planning to increase the estate tax as part of his tax hike plan. During the 2020 campaign, the president pledged to increase the estate tax along with capital gains and corporate income taxes. Still, his plan will end a major benefit for wealthy estates that reduces the tax. Russia is protesting a decision by Brazil's health regulator to block imports of the Sputnik V vaccine. The officials are citing a lack of consistent and reliable data on the shot's safety and effectiveness. The panel says it identified product development flaws in all 3 phases of the drug's trial. The developers of the vaccine dismissed the findings as political. It's time to get back to the office. That's the message from Wall Street titan Jamie Dimon. JP Morgan is the first major U.S. bank to tell its staff they'll need to be back in about 2 months. It says by early July, all U.S. employees will be in the office on a rotating schedule. There'll be a 50% staff cap until social distancing rules are relaxed. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Anne-Marie.
Simone Foxman from Doha, thank you. Now, French Finance Minister Bruno Le Maire has urged the European Union to speed up spending from its flagship stimulus package. Along with his German counterpart, Olaf Scholz, he sketched out how they would use their share of the €800 billion recovery fund to invest in the bloc's key priorities of tackling climate change and supporting digital development.
Our recovery plan provides for total spending of about 28 billion euros. The German Institute for Economic Research estimates that the German recovery plan will boost GDP by 2% and employment by about 0.5%.
The implementation of France Relance, which we presented last September, is well underway. 30 billion euros have already been disbursed in 2021. We have lost too much time. China has resumed its growth. The US is booming. The EU must remain in the race.
Let's get more from Brussels with Bloomberg's Maria Tadeo. Maria, united on the 2 biggest economies in Europe. What are the highlights of this plan?
Yes, Maria, that's a very good point, because the German finance minister and the French finance minister decided to present this plan together. It's very symbolic. Of course, the message they're trying to say is that this crisis is different for Europe. We're now playing as one team. Now, to answer your question, Marie, the French say they are looking to tap about 40 billion euros from the European Recovery Fund. 50% of that money is going to climate activities. 25% of it will go to digital. In the case of Germany, they're looking to tap less from that recovery fund, less than 30 billion euros, they estimate, but 90% of it will go into climate, digital. Again, that has been the criticism for Germany, that the economy has not been able to catch up with the latest trends. And then this other warning that came up from the 2 of them, which I would say is also very striking, was that the Commission really needs to make those payments and the disbursements of this very quick. You know, they need to make this happen before the end of the summer. Otherwise, as you played in that clip, Europe runs a risk of losing steam. You know, you have the U.S. economy that's reopening, the Chinese economy that's doing well. Europe risks falling behind if the payments are not done in time.
Yeah, certainly. They definitely run that risk. Also yesterday, Maria, Germany, France signaling they would back a 21% minimum corporate tax. But those are singular countries. Can we see a European response next?
Well, you know, Marie, that was also very striking, the fact that they would come up on the record and say, we would support this if there's international consensus. But I would argue in Europe, the tone is shifting, especially because the administration in the U.S. has signaled that they're open to talk about tax reform on a global scale. So the Europeans are much more optimistic that we could see change on that front. Yesterday, Bruno Le Maire was very clear that there should not be a race to the bottom on taxation after coronavirus. They also hope that perhaps a discussion could lead finally to digital tax reform on a global scale by the summer. Remember, Anne-Marie, the Europeans have been asking for this for years now. So I would argue, yes, you know, the Europeans would say they believe the mindset, the tone has changed. And now this is more likely than ever, especially because the politics from the U.S. have also changed in nature.
Yeah, also, Maria, Canada's finance minister gave an interview with the FT yesterday calling it a breakthrough moment, this idea of a global tax. Very interesting to see what's going on both sides of the pond. Bloomberg's Maria today on Brussels. Thanks so much for joining us. Just ahead, U.S. President Joe Biden is set to make his first address to Congress, marking almost 100 days in office. We'll get the details on his tax plans, Democratic consensus, and Republican resistance. That's coming up next. This is Bloomberg.
Asia is absolutely core to our business. It's almost 20% of our franchise revenues globally, which is significantly more than most of our global peers who are more in the mid-teens.
We want to invest, grow in China, but also we are also investing in the rest of Asia as well. Our top line growth for the region has been close to 24% last year, almost 20% of the group's revenue as a percentage of the revenue of the group. So, and this is where the group is counting on the growth.
We see company after company, these are corporates committing to net zero. So pretty much across the board, there is an enthusiasm for putting capital to work to try to get us to a better carbon future.
Credit Suisse has a fantastic brand name in Asia. We have obviously strong positions in Singapore and Hong Kong as our two main hubs, but across the region.
Start your mornings with Bloomberg Surveillance. Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
Extraordinary market day.
This rally just keeps on going.
But there is a tipping point.
The business team you love to watch. Weekday mornings on Bloomberg Television.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
If you go up to 40% capital gains tax, that's a really big problem, and that's a huge headwind for the U.S. stock market. And another huge headwind, of course, would be the wealth taxes that they're talking to me. But those would be other issues that would greatly discourage small business investment.
Jeffrey Gundlach, DoubleLine Capital CEO, on the impact of raising U.S. taxes. He spoke to our colleagues over at BNN Canada. Now, U.S. President Joe Biden is set to make his first speech to Congress after almost 100 days in office. The president is expected to highlight his progress against the pandemic whilst calling for bipartisan support on his $2 trillion infrastructure plan. But sources say he will abandon his campaign promise to increase estate taxes as he unveils funding measures for his American Families Plan. Here with the latest, we're joined by Bruce Einhorn, Bloomberg's editor in Hong Kong. Good afternoon, Bruce. Thanks so much for joining us. A little bit of a preview of what to expect. What do we know about the American Families Plan Biden will likely be discussing in this speech?
Well, the president's American Families Plan will likely include funding for things like child care, for paid family and medical leave. There'll likely be a $200 billion program for universal pre-K schooling. The president's also going to talk about tuition-free community college, as well as a four-year extension of the expanded child tax credit, which was something that was in the pandemic relief bill passed in March.
What more do we know also about the plans to pay for this with tax increases? Because this is really going to be at least what investors are going to be focused on this evening.
Yeah, so as we've reported, the plan is likely to include a near doubling in the capital gains tax. We also know that the administration wants to increase corporate and personal income tax rates. We also know that the administration is considering plans to kill a list of other deductions, exclusions, loopholes that wealthy people use. That said, at least for now, the administration is not going to move ahead with plans to expand the estate tax, which is something that they had talked about during the campaign. For now, at least, the people in the administration say that they don't think that they need that at the moment.
So this will be marking his 100 days in office. A lot of what he's going to talk about today is what he would like to do, but it's a razor-thin Democrat majority in Congress. How likely is this even going to get passed, given that some Democrats are not even fully on board?
Well, you're right that the Democrats have a very thin majority both in the House and in the Senate, and it's highly unlikely that they're going to get any Republicans on board for any of the president's proposals, as we saw with the COVID relief plan, where there was unanimous Republican opposition to it. So it's very important that the Democrats hang together, and there are Democrats who are saying, well, they've got concerns. So, for instance, Democrats from New York and New Jersey, other high-tax states, are saying that they may withhold their support for the plan unless it lifts the cap on state and local taxes. That state and local tax deduction, which was something that the Republicans passed in 2017. There are also a lot of Democrats who say that the president needs to do more on things like drug prices, on Medicare. So there's going to be a lot of discussion within the Democrats about how to get this over the finish line.
Yeah, certainly will be. All right, thanks to Bruce Einhorn, Bloomberg's editor, for joining us ahead of that speech this evening, which you can, of course, catch on Bloomberg Television. Staying with the United States, but turning to tech earnings, Google's seen a surge in ad sales. That's as businesses look to capitalize on the economy reopening. Google's parent company, Alphabet, reported earnings that topped estimates. The firm also unveiled a $50 billion buyback. The shares rose in late trading. Breaking this all down this morning is Matthew Bloxham, media and tech analyst at Bloomberg Intelligence. Matt, thanks so much for joining us. Good morning. What were the highlights of Alphabet's strong results? Is this business just going to be still driven by advertising for the search engine?
Yeah, that's right. Well, I mean, certainly search advertising was a highlight for the quarter. I mean, it's still about 70% of their total ad sales, and ads is about 80% of Google's business. So, really, really still important. And we saw travel and retail coming back strongly as people look to, buy things and go on holiday again. So that's, I think that's really great for them. I think the other area that I think really caught people's attention, though, was YouTube, which is still relatively small, but grew at 49% in the quarter. And I think a couple of things in there that were quite interesting for people. One was that they really called out what they call direct response advertising. So when an advertiser wants somebody to make a purchase off the back of an advert rather than just brand building, and that rather than just kind of putting YouTube into competition with traditional TV, is potentially taking the competition to Amazon on shopping, and they said they were really going to continue to focus on that direct response offering to customers. The other area is actually how they kind of pull together search with maps and YouTube, so that they're getting advertisers who are bringing together all three components of that Google platform into kind of cohesive campaigns, and that's something that's kind of relatively new, and I think could be quite powerful for the company and advertisers going forward, and something that is unique to Google in the advertising offering.
Matt, Microsoft also sales profit topping estimates, but the market not very much enthused about what's going on there. Is Microsoft having a more difficult environment right now than Google?
Yeah, I think the difficulty for Microsoft, to be honest, is that it's an almost $2 trillion market cap company, and when you're that big, you really have to pull something huge out the bag to surprise people. The results are good. Revenue up 19%, 15th straight quarter of double-digit sales growth. It's hard to see what more they can do, and certainly the CEO was very optimistic about the forward pipeline. He said that digital adoption curves are accelerating, not slowing, and he described it as just the beginning of a decade-long transformation of how we use digital technologies. I think they're certainly very optimistic about the future, and it's really around their cloud services, particularly the Azure platform, that's really delivering for them. So still very much Microsoft the leader in cloud services.
Yep, and today we're going to get Facebook and Apple, so we'll see what else is shaking up in the tech world. Thanks so much for joining us, Matthew Bloxham, our media and tech analyst at Bloomberg Intelligence. Just ahead, Wall Street prepares its return to the office. Jamie Dimon becomes the first executive to bring his U.S. employees back into the building. No more at your kitchen table. Back to the office. This is Bloomberg.
Wednesday, the Fed decides. The Fed is on hold waiting on inflation. But for how long? Coverage begins 2 p.m. on Bloomberg Television. Global markets never sleep, so stay connected with Francine Lacqua in London, Matt Miller in Berlin, and Kaylee Lyons in New York. Perspective on the day ahead. Bloomberg Surveillance, Early Edition. Weekday mornings on Bloomberg Television.
I had seen how computing power had been growing at an exponential rate, and memory storage and disk storage all had been growing very rapidly. But batteries and energy storage had been growing at a very, very slow rate, about 3, 4, 5% per year. So it takes about 20 years to double energy density in batteries at that rate.
That was QuantumScape's Jagdeep Singh, the company turning heads with its claim to have built a next-generation battery that could increase the range of an electric car by as much as 50%. You can read about the company in a Big Take special on the Bloomberg Terminal and website, a fantastic scoop by Akshat Rati. Now, we're just over an hour away from the start of European equity trading. What is going to be the focus today is, of course, how Deutsche Bank shares react to that blowout first quarter. It reported the highest quarterly profit in 7 years and raised its 2021 outlook. Debt trading revenue was up 34% versus 17% when it comes to Wall Street average. One thing, though, the CFO did say in our Bloomberg television interview, don't expect the second quarter market momentum to match the first quarter. So a little bit of a cold water there from the CFO. Maybe just wants to make sure expectations are in line. Now, staying with banks, JP Morgan becoming the first major U.S. bank to mandate a return to office for its entire workforce in the nation. In a Tuesday memo, staffers were told to start making arrangements. Joining us now is Danny Berger. Danny, how soon are JP Morgan employees going to bid farewell, RIP, to their Rona rigs?
I know. What are they going to do with all their extra screens and ergonomic chairs? Hopefully those just don't end up in a landfill somewhere. But JP Morgan's saying that in about 2 months' time, they want employees to come back in. So let me read from this memo that was sent from the decision-making body, of course, headed by Jamie Dimon. They said that they would fully expect that by early July, all U.S.-based employees will be in the office on a consistent rotational schedule. With this time frame in mind, you should start making any needed arrangements to help with your successful return. So a couple key things there. One, it's going to be on a rotational basis. As it says in that memo, it's about 50% capacity they're looking at based basically in line with government social distancing. They're also encouraging employees to get the vaccination, though, of course, that's not mandated to get back in. The question now, with JP Morgan leading the charge, are we going to see Goldman Sachs follow suit? We know Solomon has been pretty vocal about this as well.
Yes, if you work at JP Morgan and you decided to move down to Florida for some sun during the pandemic, you got to get back to New York City in the tri-state area. What's going on, Danny, on this side of the Atlantic with UBS and Credit Suisse? Still in crisis management mode, of course, after our Kigos. They've announced some new personnel changes.
That's right. And these, instead of what Credit Suisse has already done, that is changing up their prime brokerage and risk, this is mostly concentrated in legal and compliance. So UBS, key here, they're not changing up any of the risk or prime brokerage employees, at least for now. Instead, they have a new general counsel. They have a new legal officer, chief officer, that is. At the same time, Credit Suisse bringing in a new general counsel, but that's because their former general counsel has now taken over the role of compliance head because there have been so many changes. Just also should note, Nomura, some big changes there as well. They're suspending a group of senior executives. That's going to be the head of prime brokerage, the head of the U.S. business, as well as the head of equities. And so, again, that's more similar changes to what Credit Suisse did, Anne-Marie.
All right, thanks to Danny Berger. Keep an eye on all those bank stocks coming up next. That does it for me and Daybreak Europe. Manus will be back in the chair with me tomorrow. The European Open is up next. European and U.S. equity futures to the upside. FTSE 100 futures up 0.3%. And there's London. Can't find the sun this morning. Good morning. This is Bloomberg.
There is renewed global attention on the fact that the efficacy levels of Chinese vaccines have not reached the levels that we've seen from the mRNA vaccines in Pfizer and Moderna, and even Russia's vaccine. All of these have efficacy levels above 90%, but the Chinese vaccines are ranging between 60-something% to just below 80%. And specific attention is being paid on one Chinese vaccine, Sinovac. This vaccine has been proven in a large-scale Brazil trial to have an efficacy level of just above 50%. 50% is the minimum threshold that regulators will accept for approval. So that is concerning, especially because this is the Chinese vaccine that's been distributed most widely around the world. A lot of developing countries like Brazil and Indonesia are dependent on this vaccine. So questions are starting to mount on how is this going to affect the global immunization effort. But what's also really important to keep in perspective is that the 50% efficacy rate is looking at all symptomatic disease, even mild sickness. And the truth is that all the vaccines we have out there right now, including the Chinese ones, are nearly 100% effective at preventing hospitalization and death. And those are the two most important things: bring down serious sickness, bring down fatalities. We're still going to see that happen around the world, and that's why it's really important for people to keep getting vaccinated, even if the only access they have is to a Chinese vaccine.
I think what we've seen during this period of time is that communicating via video is not a fad, that we are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
Good morning. Welcome to Bloomberg Markets, the European Open. I'm Anna Edwards, live in London. Mark Cudmore, our Markets Live managing editor, joins me in Singapore to take us through all of the market action this hour. The cash trade is just less than an hour away. Here are your top headlines. Deutsche Bank's big beat. The lender posted its strongest quarter since 2014, boosted by its trading units. It is Fed Day. Investors look out for Jay Powell's views on inflation and the accelerating recovery from the pandemic in the United States. And Alphabet revenue smashes estimates and buyback plans boost the stock after hours. Microsoft also beats the street, but not enough for investors. Good morning, everybody. Welcome to the European Market Open. It's just gone 7 o'clock here in London. It is later, of course, in Singapore. Mark joins us from there. What are the markets saying to you, Mark?
Well, it's a relatively quiet day in markets this morning, Anna. Good morning. And that is to be expected, given we've got the FOMC tonight and we've got lots of earnings to scrutinise and, of course, the Biden tax plan as well. So those issues are preoccupying traders. And, of course, the humanitarian tragedy that is the virus continues to get worse in India. That's also distracting people. So the macro environment's relatively quiet today.
Yeah, absolutely. So we will continue to pick up on some of those themes, certainly around inflation and what's going on with yields shortly. Let's get back to some of the breaking news we've got going on here in Europe. We've got some corporates reporting, it being just past 7 o'clock here in London. And we'll start with the banking sector. We've got numbers coming through from Lloyds Banking Group. Q1 statutory pre-tax profit, £1.9 billion. That is the red headline across the Bloomberg. The estimate was 1.17, so that does look to be better than had been anticipated. They're giving us a raft of other items. Net interest margin 2.49%. That's pretty much as expected. 2.48% was the estimate. They are taking some Q1 impairments of £323 million. They are accruing the dividend with the intention of resuming their dividend policy, and that is going to be interesting for many people holding that particular stock. No doubt their comments on the mortgage market will be interesting. Such a big player in the UK mortgage space. We'll look out for any comments that come through on that front, given that that's been so government supported of late. Let's talk about the advertising market. WPP, they have given us their numbers this morning. Q1 comparable organic sales up by 3.1%. The estimate was for a drop of 0.37%. So that does look to be very much ahead of estimates and actually ahead of the competition as well. There had been high expectation going into these numbers that perhaps this business, would it live up to or would it not live up to the record set by Publicis, which was organic sales growth of 2.8%. So here's WPP with a number that is up by 3.1%. So that seems to be certainly beyond what was estimated, what was anticipated. They are reiterating, this company is reiterating its 2021 guidance. Lots to talk about then with the business. We will do that a little bit later on in the programme. Coming up later on the European Market Open, we'll speak to the CEO of WPP, Mark Reed. That interview coming up at 8:30 UK time, so in around an hour and a half. We're just under an hour away from where we are on futures. Yesterday we had negative here in Europe. Futures now look positive for Europe, and we have a slightly more mixed picture perhaps coming through on the US futures picture. Of course, a lot of focus, Mark, on yields, a lot of focus on commodities as we build our way to the Fed. What do you see on the GMM?
Well, the GMM page is very, very mixed today. It's kind of not showing many themes. There are two small things to draw attention to. One is that, thankfully, for many people out there, the commodity sector is taking a break. So we're seeing red in that commodities column across the board. Of course, commodities have been absolutely surging, and it's one of the big macro themes this month, but they are pausing today ahead of the Fed. The one other thing to draw attention to is that in the equities column, you can see that Indian equities are having another good day. And that's a theme of this week, that with the backdrop of the human tragedy that's going on there, the equity market has been incredibly resilient and trading strongly all week.
OK, let's think about where we are on some of this earnings news we've had out this morning, and we'll go to the banking sector. Santander has beaten estimates for net. Lenders saw US earnings jump as it booked lower costs and charges. Underlying profit also jumped and was the highest result since the second quarter of 2010. The numbers are a boost to Chair Ana Botín's efforts to restore profitability that had been eroded during the pandemic. I'm pleased to say we're joined now by Santander's CFO, Jose Garcia-Cantera. Jose, very good to speak to you once again on the programme. What are the drivers, the underlying drivers, if you like, for the strength in the performance you're reporting today?
Good morning, and thank you for having me in the program. As you saw, net operating income pre-provision profits was up 15%, thanks to very good performance in our net interest income, coming from growth in both loans and deposits and mutual funds, and strong margin management. You can see that in the UK, in Spain, and other countries where we have been lowering the cost of deposits. And also the strong fee income as the economies started to recover, particularly coming from CIB and individuals, and obviously our cost control efforts. We announced very deep cost control actions, and these are being delivered.
Good morning, Jose. As you say, good results, and you say that there's very close cost control actions. You've booked a $530 million charge for restructuring this year. How many more of these one-off costs can we expect to see in coming quarters?
No, this is the charge that we expect for the year. So we wouldn't expect to have more restructuring charges. These correspond mostly to the UK and Portugal. But again, this is what we expect for the whole year.
You've managed to turn in some good numbers from the UK and the US. In my first question, I was asking about the underlying drivers. I wonder if you can expand on that just a little bit. And is it possible to link the rollout of vaccines then with stronger performance in the business? Talk us through what the drivers are here.
Well, definitely. Both the US and the UK are more advanced in the vaccination program than many other countries, especially in continental Europe. And that obviously can be seen in the business. In the US, on top of that, the work that we did over the last few years position us very, very well to benefit from improving market conditions. We have also made significant regulatory progress as the Fed terminated our written agreement. So very good, let's say, foundations to benefit from improving conditions. We are growing our business. Net operating income in the US increased 19%, and also cost of risk decreased, especially in our consumer finance business. In the UK, very strong mortgage market, very strong volumes, and also the margin management that I mentioned before, coming from the change in the conditions of our current account. Also, a year ago, we started to see improvements in our efficiency ratio in the UK, and that is also contributing to that. Also, very, very low cost of risk in the UK. So, fundamentally, very strong performance in all lines of the P&L in both countries.
You've received some very strong, well, not you personally, but the banking sector has received some very strong criticism from the Spanish government in the last week. How do you expect to kind of respond to that? And have you been in touch with the government specifically on those comments?
Well, we have, and indeed, we are transforming our distribution network, not only in Spain but in all countries. The customers are changing their relationship with the banks, and they are using more and more digital channels. In the first quarter, we conducted 50% of our transactions through digital channels. So obviously we are adjusting again our distribution network to what our customers require. We are investing at the same time in digital channels. We're investing in high value-added call centers. So this is a transformation of our distribution network, and this is not only happening in Spain, but it's happening everywhere.
Okay, that was part of the criticism, perhaps. There were many legs to it. Let me also ask you about something else then, Jose, and that is about the lawsuit with Andrea Orcel. It's supposed to be held in May. Are there any chances that you're going to settle on this front?
Well, this is the legal proceedings are ongoing, so it would not be very appropriate for me to comment. Our focus is very much on running the business and supporting our customers from the pandemic, and especially in Spain, that was hit very, very hard by the COVID.
Would you like to avoid this ending up in a courtroom, though?
No, as I said, I mean, the legal proceedings are ongoing. So, again, let's wait to see how those develop.
Okay, let me ask you briefly about the Brazilian business. How concerned are you about the economic and currency volatility that we're seeing in Brazil? Clearly, the dreadful fight against coronavirus there still very much in train.
Well, the pandemic is hitting some developing economies harder. In Brazil is being hit also quite hard, especially in the north of the country. Brazil is like a huge continent, as you know, and we have very different areas which are being affected differently. We're working very hard with authorities to try to help in solving that. Having said that, on the back of that, the economy is doing pretty well. The banking system is growing. We have historically low interest rates, affordability rates for customers and SMEs, for individuals and SMEs, is at all-time high. So we are seeing quite a strong, robust financial business in Brazil. Our return on equity in the first quarter was over 20%, around 20% in Brazil, which shows how well the economy is doing and how well the financial system is doing.
Thank you so much for joining us. Good to speak to you, Jose Garcia-Cantera, the CFO of Santander. Thank you very much for being with us on the European Market Open. Coming up, delivering a profit, we talked to the CEO of Delivery Hero about the company's earnings and outlook post-pandemic. That conversation next. This is Bloomberg.
Model minority myth wasn't something that was fabricated by the Asian Americans. It was created as a tool to alienate the Black and the Asian American communities, and it was incredibly successful.
We know that racism didn't begin yesterday. We know it's probably not going to end tomorrow, but it is our job to make sure that there's progress and we keep people safe, give people dignity.
I spent a lot of time last year to just listen, to understand, to reflect and understand what I could do as a leader of this organization.
For many years, we've been very shareholder focused, and now there really is much more of a community requirement.
The economic downturn in the U.S., we're seeing unemployment and income losses affecting women more than men.
2/3 of the jobs lost in South Africa were women's jobs. So I think we're in a moment of crisis.
Clearly, our societies are reproducing, not producing inequality.
We need better public policy and we need companies to step up.
President Joe Biden, nearing 100 days in office, addresses a joint session of Congress. COVID, the economy, the plan forward. Wednesday, 8:30 p.m. on a special edition of Balance of Power on Bloomberg Television and Radio.
Welcome back to the European Market Open. 45 or so minutes to go until the start of cash equities trading, and futures actually looking quite positive for the European start of trade. Lots of earnings to get through this morning. Let's get to one of those conversations now. Delivery Hero has reported strong first quarter results with revenue beating estimates. The food delivery giant has seen orders rise 88% year on year. It is also predicting its 2021 revenue will grow to as much as 6.6 billion euros. We're joined now by Delivery Hero's CEO, Niklas Östberg. Thank you so much for joining us. Your first quarter numbers do look to be way above estimates in terms of the GMV, the gross merchandise value, some of the numbers coming in well above what was anticipated. I suppose if I'm looking for a negative or a doubt to ask you about that, Niklas, it's how sustainable is that when people start to leave their homes more and get to eat out at other places?
Hi there, and thanks for having me. Well, yeah, we had a fantastic quarter, but we also had a fantastic 9 consecutive quarters with 100% growth. So it's not the first quarter with good results. It's a continuous progress and a lot of work behind it. And I think that will stay. And of course, there are some tailwind when we look at COVID environment, especially in European segment, where we can probably expect that growth will come down. But I think overall as a group, I think we stand very strong with Asia as our largest segment.
Good morning, Nicholas. It's an incredible growth story in terms of the revenue side, but obviously the profit sector is going to become more and more important at some point. And I guess at what point do you change from the focus of market share to a profit focus? Are you at that stage yet or not yet?
Well, we don't see so much as a focus on one or another. We are extremely focused on efficiencies, but we're also very focused on investing to our customers, making our service better, continue to evolve into quick commerce and other new verticals that we're pushing very hard. So for us, it's more about driving a gross profit per order to drive that efficiency. And as long as we have that gross profitability order, we know that it's just about scale and size that takes it to profitability. And when the moment comes, there will be a moment when our size is so large that we will drive a profit also for this business. But we don't have a general shift in mindset. We are extremely cost focused already today.
If you say it's about scale and efficiency, do you have expansion plans? And if so, into which markets or businesses?
So we launched our quick commerce, which is delivery of anything from groceries to e-commerce items in very fast manner. For us, it goes as fast as 10 minutes for our local warehouses, but we also have 85,000 local stores that will help building business and giving them the tools and delivery systems and online presence to compete with larger e-commerce companies. So that is a big investment area to help those small merchants. Another big area is, of course, some market launches, and we had Japan, where we invest quite aggressively to build a strong business there. So we continue to be in more of a growth mode, new areas, new opportunities.
As people do in some parts of the world, start to get back to life that looks a little bit more like normal, Nicholas. And of course, that is certainly not everywhere. Some places still fighting the fight against COVID. But how are you going to keep up momentum in the business when that happens? Are you going to have to suffer some lack of pricing power?
Well, I hope we go back to normal very, very soon. It's been a very long time. And I think for us, some regions have been possibly impacted. And I think it also has changed a behavioral shift among consumers. They have realized the value of delivery, that you don't have to cook every meal yourself. You don't have to pick up groceries yourself all the time, but you can actually outsource some of that activity from time to time. So I think even if you go back to normal non-COVID environment, I do think that behavioral is still going to be there. The appreciation for our service is there, and we have fantastic feedback in terms of NPS scores and customer happiness. So I do expect that most people will still stay. They may order slightly less if they work later, and maybe there will be smaller baskets that might work for one person in the office rather for a full family at home. But I think most of our business is standing strong, and we keep focusing on delivering a good experience. And as long as we do, I'm not too worried.
It's interesting you say that a lot of this behaviour you think is entrenched will probably remain as we reopen. I'm curious that given that we're starting to see some cities reopen, thankfully, are you starting to see any kind of impact at the margin in that change of behaviour from those reopening, or is there no sign of it yet in terms of your business?
Yeah, no, we haven't seen much yet. We've seen in occasions when there have been strict lockdowns that we have a big peak over a few weeks where people order significantly more, but then it usually goes back to normal, and we have seen that over and over again. Right now, there is a peak in Europe of behavioral, and we probably go back to normal soon, but I think in most of our markets, we are already back to normal. If you look at Asia, it's been back to normal for a long time, and that is more than 50% of our business. So I do not expect too much drop down for us, at least, who were never that impacted by COVID in the first place.
Nicholas, thank you so much for joining us. Good to speak to you. Nicholas Osberg, the CEO of Delivery Hero. Thanks for coming to talk to us here on the European Market Open. Let's get a Bloomberg First Word News update. Here's Laura Wright.
Thanks, Anna. In the US, President Joe Biden is urging Americans to get vaccinated. He's pointing to new guidance that people who've been inoculated can socialize indoors without masks. The change in rules might help convince people who've been hesitant about getting their shots. According to Bloomberg's vaccine tracker, about 140 million Americans have had at least one dose of a vaccine. Google's seen a surge in ad sales as businesses look to capitalize on the economy reopening. First quarter revenue for the parent company Alphabet came in at over $45 billion. The firm also unveiled a $50 billion buyback, sending shares higher in extended trading. Russia is protesting a decision by Brazil's health regulator to block imports of the Sputnik V vaccine. The officials are citing a lack of consistent and reliable data on the shot's safety and effectiveness. The panel says it identified product development flaws in all three phases of the drug's trial. The developers of the vaccine dismissed the findings as political. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Mark, Anna.
Laura, thank you. Laura writes here in London. Still to come on the programme, President Biden pledges vaccines to help fight India's deadly second wave. We'll get the details next. This is Bloomberg.
Right now, the mask fashion is not really favorable to makeup, but we know that, and we are convinced that when the pandemic is over, when people get back to a normal social life, when they meet each other, they party, makeup will bounce back.
Countries that entered this crisis with limited fiscal space, with more vulnerabilities, need to be supported for the benefit of the world.
The transparency of the debt burden for the poorest countries needs to be increased. There needs to be fuller disclosure.
Valuations, particularly, sort of the technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
We are short of bed, we are short of oxygen right now, and we are short of other things. It is very difficult right now to see the patients.
We're here in the emergency department of Mulchand Hospital in the capital, New Delhi. This wasn't part of the hospital's emergency services until the second wave of COVID hit India. Now they've had to use every available space to cram in patients who are incredibly ill. They're in need of oxygen, ventilation and critical care. The oxygen supplies here have been running critically low for days and days. Doctors tell us they don't know how long their oxygen supplies will last, when they'll get another delivery or how much they'll get delivered. It makes it incredibly difficult to run this emergency department and get through this crisis.
People are not realizing the fact that it's a second wave is always deadly. We always anticipated second wave somewhere in April and May, but we never knew it will hit us so hard and so fast. Because last time when Corona was here, we got some time for preparation because the cases were not coming. But this time after Holi, within 1 day, we had around more than 2 lakh cases. And the problem is everybody requires some oxygenation and they need some kind of treatment, and hospitals are our burden.
Add to that, many of their colleagues, many of the doctors and nurses here are COVID positive themselves and have had to go home and isolate, leaving this hospital incredibly short-staffed and running on empty.
We are really hard. We are managing the patients to save their life, and what to do? We have to work on this. This is our situation. We have to fight for this. It's like a war situation.
That was Bloomberg's Ruth Pollard reporting from New Delhi's embattled hospital scene, and we've certainly seen plenty of images coming to us of hospitals that look to be in an even more chaotic state when it comes to the fight against COVID. And Mark, I know that you've been looking at the latest vaccination rollout, which clearly has to be the solution here.
Yeah, this is a really traumatic situation, and unfortunately, the vaccinations are also slowing down over the last few weeks. So we're averaging only about 2.6 million vaccines a day over the last 2 weeks, 2.6 million doses, which really means 1.3 million people effectively being fully vaccinated on a daily rate, which is less than 0.1% of the population each day. So vaccines do help over a much longer term, but unfortunately, they're happening at a very slow rate, and this is a really tragic situation.
Yeah, the pace has to speed up, doesn't it, for a country that produces so many vaccines, of course, for the rest of the world, something that Prime Minister Narendra Modi has talked about in the past. Coming up on the programme, we will, of course, continue to focus on what's going on the fight against COVID-19. We'll also get back to the business agenda. We'll talk about some of the earnings stories we're dealing with this morning from a market perspective. This is Bloomberg.